Good morning, everybody. Welcome to NinjaTrader Live. My name is Jim Cagnina, and I am joined by the legendary Shy Girl. How are you?
Good morning, Jim. How are you doing? Good morning, chat.
I'm doing pretty good. I think the rain has passed me now. Hopefully, the same is true for you.
It looks like it has. We had visitors yesterday at the studio. We had a turtle and a duck. I don't know. The rain brought them to to our front door.
Wow. Wow. Welcome to the South, or at least that part of the South, Tracy.
Right?
So overnight, everything seems like we're waiting for CPI. Nothing's really moving today. What's going on?
Yep. So we're waiting for CPI. We did have some headlines this morning. The big deal today is that Trump is in Saudi Arabia with the head of everybody who's who in the financial world, BlackRock, uh, Tesla, Elon, everybody, you name it. And they're looking for, everybody's kind of looking for deals. Saudi Arabia is looking to kind of drum up money for their huge plans, $1 trillion plans to kind of expand that country out of being just an oil producing nation, but more of a tourist destination, as well as the United States is there to try and drum up. Well, Trump would like to get $1 trillion investment from Saudi Arabia in the United States. And so we shall see what happens. So that's kind of the major headlines that's going on right now. Also, we did have BlackRock, Think, did talk this morning at that event. And he basically said that there's still trillions of dollars of financial power sitting idle in cash amid trade war worries, which is interesting. So we've got 12 trillion euros sitting in bank accounts in Europe, and in the United States, there's 11 trillion sitting in money market funds. So he thinks, as soon as we see some sort of uncertainty ease, we could have a lot of money rushing back into the markets. We also have Coinbase up for those crypto people. We have Coinbase up after it was said to be included in the S&P 500. On the China-U.S. truce front, we have China remove the ban on Boeing deliveries. That said, the rare earths, which we know they are a major producer of, are still kind of up in the air, so we don't really know yet. It seems like the exporters in China are still asking the government to kind of clarify whether they're allowed to sell to the U.S. or not, since neither side has explicitly addressed the rare earth critical minerals.
So interesting. Overnight, nothing really moved in the markets except for platinum and silver. They're up. Those two markets are up over 1%. That's the only one that kind of raised my eyebrows. I'm not sure if it's just continuation from yesterday or what's happening there, but if that's related to any rare earth type of dilemma that we might see.
I don't know. Well, this morning we do have Brien Lundin on, who is the editor of the Gold Newsletter and CEO of the New Orleans Investment Conference, which I had the honor of speaking at last year. I was a little bit nervous at that one because it's such a big conference. We'll see if I ever get asked back on that one. But he is excellent, and he is the go-to in that precious metals world. So we're going to get an opportunity to talk to him about those markets this morning.
Very awesome. I mean, is the idea going back to the Middle East, is the idea, of course, to generate commitments to build projects in the US as opposed to in the Middle East, or kind of joint cooperative
It's kind
on both sides?
it's it's kind of two-sided on that. I mean, we have Saudi Arabia again is looking for a lot of investment, turning kind of Saudi Arabia into more of a tourist destination. You have that big project Nome, which has been talked about, but there are plenty of others. I'll post a chart out on Twitter on it. I have a chart that kind of shows exactly what they're looking for. And then, and of course, the U.S. delegation is looking for investments within the United States as well. And Saudi Arabia already has significant oil and gas investments in the United States. In fact, they own Motiva, which is the largest refinery in the U.S.
No, I didn't know that. I was reading about that green hydrogen project. Is that the NOM, the green hydrogen project?
So, no, that's a different. Nome is like this encased habitat where people can live literally within like a glass wall thing.
Oh my God. Yeah. No, but the green hydrogen thing was interesting. I mean, basically you take water, you separate the hydrogen out, you turn it you turn it into ammonia maybe, or I can't remember, and then you transfer it somewhere, and then you crack it, and you get the hydrogen back out. So it's basically you're taking water, using the power of the sun as energy to do that, and make an energy input that could power turbines and stuff like that. So, we talked about it yesterday a little bit, but when I looked at their game plan for their agenda, that was like number 2 on the agenda list, which kind of surprised me. So, and maybe they did it in some kind of random order. I don't know.
I don't know. Well, the problem with hydrogen is that there just isn't the demand for it. So we actually have seen quite a few projects kind of shut down on that, particularly I believe it was Sweden shut down like a 10-year project they had in hydrogen because it just never became profitable and there just wasn't the demand there. So, but we'll see.
Yeah, for sure. The U.S. dollar, I think, is it turned considerably over the last week or so. I'm looking at the Euro FX, and Euro FX has kind of fallen out of bed and still hasn't recovered, and is also in a pause mode today after yesterday's big sell-off. But this should be maybe a bigger story with the dollar gaining some strength against some of the major currency pairs.
Yeah, I mean, we'll have to see. Obviously, with that trade deal, we did see the dollar surge yesterday in early trading, and then again in the U.S. session. We have pulled back a little bit this morning, so we shall see. For me, that 101 spot 977 was a big level, so I think it's going to take a lot to get above that. So we'll see. I kind of feel like markets are a little bit kind of after those big moves. And, Anthony and I were talking to Helene about this. After the markets make these huge moves, a lot of times they're in kind of that consolidation mode. And I feel like we had so many markets with so many big moves yesterday. We may be just in a little bit of a consolidation zone today, kind of like a pause after yesterday's moves. But, we'll see what that CPI data comes out at. Again, data this morning, we have at 8:30, we have CPI and core CPI index, and then also real average hourly earnings and real average weekly earnings. So all the data we have today is at 8:30. After that, it is a pretty quiet day.
Yeah, I mean, speaking of CPI, I mean, I think this used to be the most anticipated report of the month. Maybe the employment situation, is tied for first place. But is this going to be back in the news anytime soon? Are we thinking about inflation 2.0, or I'm looking at this board right now, month over month expectation 0.3%, year over year 2.4%. That's not, those seem like good levels to me.
Yeah, that wouldn't be a market mover. I don't think we'll really see this, would see this as a market mover unless it came in unexpectedly hot or unexpectedly cold. But if we're, kind of right there. I don't think it's going to be a big market mover with, with the focus being on trade and tariffs right now.
Yeah, but I'm wondering for the April data, if there's any impact because of the, I don't want to use the word chaotic, but
Preloading.
yeah.
Preload. I don't know. We might come in a little bit hot. Looking at all of the banks this morning, the consensus seems to be 2.8 on year to year, so a little bit higher than what they have as the expectation, and then 0.3% month over month.
Yeah, I want to, if my memory serves me correctly, the Cleveland Fed Research Group, whoever they are predicting a 2.35 month over, I'm sorry, 2.45, I think, month over month a number. So it's pretty close to what whoever creates the consensus, the experts, is pretty close to that level.
Right. Not sure who the consensus people are, but it is that. So we'll see. Again, I don't think markets are really going to move on this number unless it's, completely offsides either way, in either direction, either completely cold or completely hot.
Yeah, and then the NFIB Small Business Optimism Index came in a little bit better than expectations at 95.8, but my guess is that's a pretty minor non-market moving report.
Yeah, it's not really not a huge market mover, but an important data point nonetheless.
Yeah, there you have it. So again, for whatever the reason, everything seems to be unchanged, right? The even the S&Ps, down 5 points. That's pretty unchanged. And gap today. I was like, hey, there's no gap today. This is great. We're miles away from that gap being filled right now from Sunday night. And the Dow, I think, is taking a hit because we had some drama with United Healthcare, which is the biggest component, or at least it was the biggest component in the Dow group of stocks in that basket. But that one's taken hit because of that particular company, I think.
Yeah, absolutely. Obviously, great news for Boeing that China has lifted the restrictions on that. What is also interesting is data from Tier 1 Alpha showed that yesterday's huge move really was, again, still dominated by 5 stocks worth 30% of the move. That was Apple, Amazon, NVIDIA, Meta, and Microsoft.
Yeah, but I'm wondering if we go back to normal trade relationships with China, does that change the trajectory of some of those big five in terms of where they manufacture their stuff?
Yeah, absolutely. But again, I know the markets got really excited about it and they're looking for any excuse to rally at this point and any hopium on some sort of trade deal. But we have to remember still, I mean, this is just another 90-day pause. So tariffs are paused for 90 days. We don't know what's going to happen. And, I'm worried that they're just going to keep kicking this down the can, and it's going to be a year later and we're still on 90-day pauses, right? And nothing really comes to some sort of heed at that point.
That's the ultimate hopium right there. Let's just keep doing 90-day pauses, 90-day pauses, 90 for 4 years.
Right? It's kind of what I'm thinking.
Oh,
Hopefully
man.
not.
Yeah. Hopefully things will get settled and the companies could figure out what they're going to do with their CapEx and make all their supply chains normal again.
Yeah, I mean, we are seeing a little bit of pressure on those secondary Asian markets, PAC Asian markets like Vietnam, where we have had some supply chains move over. And now the problem is that now tariffs are back down on China, but they're up on countries like Vietnam and Malaysia, where some of those supply chains have moved. So seeing a little bit of pressure on those markets this morning and a little bit of worries from those governments as well.
Yeah, a little bit of whack-a-mole going on, but let's go ahead and do a really quick edge report before we get to our main event. Brien Lundin is in the house. Let's go move over to the edge report. All right, we will start with the E-mini S&P right now. We're still about a little over 5% off of the highs that we saw in, the middle of February right now. But we are trading slightly above a key level that I have, that 58.37 right now on a daily. All the retracement levels have been achieved. We're all just short of that 78.6%. We've been overbought in the stochastics for quite some time, really ever since the 25th of April, but it can stay overbought for a long period of time, so I wouldn't worry about that too much. We're trading well above that anchored VWAP. We're trading, all the moving averages are sloping up, but they've all crossed over right now. The 21 is about to cross over the 50, so that's a little bit positive. From an intraday point of view, there are some targets here. Remember, we're going to get some we're going to go to Tracy with the numbers in a couple of minutes here. We have some targets in play. Let me open this up a little bit, particularly some gamma levels. Gamma level 3 at the top here is at 58.75, and that's right pretty close to previous session's highs. So there's kind of two areas of interest up there. To continue on, there's also call resistance up at 5,900. That's an even number, not surprising. And then above that, we have a 0 DTE gamma wall at 59.10. On the downside for the E-mini S&P, we do have that, we have a couple of areas here kind of together. We have the pivot right there next to JAX 2, which is also a gamma exposure level, right around 58.25. And then we have that one-day min at 58.10, which is that Mentor Q one-day min calculation, which we keep our eye on. 0 DTE put support all the way down to 5,800 as well. I know it seems a long way away, but this market's been moving. Once the news has been hits the street, this thing has been moving. Let's go to gold. And we're going to get some more in-depth conversation, I'm sure, on gold in a minute. Nice double bottom here is formed in gold right now. Support approximately 32.20, give or take. That's my rectangle down there as well. 50% retracement from this low touch point here in April 7th. We're kind of right in the middle here. VWAP is in play right now, this anchored VWAP. We're trading right below it for the second day in a row. The 8 EMA is arcing down, but poised to cross under the 21 EMA. Unless we get a pause, unless we get a halt. We do have a little bit of a cross under here on the stochastics, which is a little bit bearish as well. Drilling into that intraday, and look at that. I have a wild fib there. Let's get rid of that. We have also some gamma numbers and some other areas of interest to consider from an intraday chart. This is a 30-minute chart here. We have that one-day max, again, by Mentor Q, framing the top of the conversation right now. That's it, just short of 32.70. For the bulls, we have R1 up here at 32.87. Previous session's highs is the next stop up, and that's approximately 32.95. And then Mentor Q blind spot 4 right north of 3,300. On the downside, which looks like we're going there now. We have JAX 4 at 32.35. We have previous sessions lows all the way down here as a target at 32.11. And then below that, we have a whole bunch of areas of interest. 0 DTE, S1 for the pivot, puts support between 32.05 and 32 even. One-day min again, way down here, 31.87. So there's some clear and present targets here on gold. Pivoting over the 10-year note, pretty much just kind of hasn't done much. Let's go to a daily first. We're still below my consolidation range, right? That area of support, in my mind, started at 110 in 09 half. We're trading below it again for the second day. We're trying to drive back up there again with a little baby candle, but I don't know if we're going to make it. We have moving averages crossing under. We have stochastics in the basement. It's looking a little bearish, which means yields are a little bit higher. Right now, the 10-year micro yield at the CME group is 4.444, still below 4.5, but it's starting to get uncomfortable. The intraday, we have some great levels as well on the intraday. We traded above JAX 1 today consistently, actually, which is interesting. That's 110 spot '08. And then we have R1 on the upside, which is a pretty viable target, 110, 14, 30 seconds, and then all the way up to that 0 DTE gamma wall at 110 half or 110.16. On the downside, we have previous sessions lows, 110.05 1 half, put support at 110 even, and then S1 all the way down here at 109.28. So, we'll see if CPI does anything or if there's any other unplanned news coming down the pike. That is today's Edge Report. Now for the main event, or at least one of the main events. We have a very special guest in the house right now. We have Brien Lundin, and as Tracy pointed out, Brien writes the Gold newsletter and is the CEO of the New Orleans Investment Conference. Good morning, Brien. How are you?
Doing great, Jim. Thanks for having me on.
No, it's
Hey,
our pleasure.
Brian.
For sure. Yeah.
Hey, Tracy. Good to see you.
So, Brian, I've my main question to you, my first question on the out of the box is, I want to talk about gold. Gold has been on a tear, right? We've had some nice moves up in gold lately, and we look at the gold futures, obviously. My question is, how does the flow of purchases and sales go between central banks? Like, right now it looks like Poland might be the biggest country buying gold, along with China, India, even Kazakhstan, more so than the U.S. How does that flow picture work?
Well, it really depends on what the central bank is and where the gold it's buying is coming from. If it's coming from another central bank, then it's already in 400-ounce, what's called good delivery bars. If not, it has to go to Switzerland, where most of the world's refiners, gold refiners, reside. And you can trace that through global gold flows. It's all tracked in imports and exports. Not to say there's not some surreptitious buying and selling going on, because China is widely regarded to have much more gold in their reserves than they're reporting. And in that case, I believe they're taking kilogram bars in one of the few differences. So depending on where they're buying it, it may have to go through Switzerland or some other refinery, primarily Switzerland, to get recast into the form that is acceptable for central banks.
Excellent. And I have a question. Well, I have a lot of questions, but we'll start with the gold question first. So every time we see a pullback in gold, everybody says the rally is over. This went too far. Yet we've seen very shallow pullbacks. And when we look at retail flows, we've seen net positive flows in retail every month this year so far, which is something that we haven't seen in a very, 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 very long time.
Mhm.
And so, kind of, what does this mean for the gold market? And is retail just late to this, and we have further to go? What are your thoughts on this?
Yeah, great point, Tracy. This gold bull market is different from any other. Now, remember that gold traded as an investable asset only since 1971. Before that, it was simply money. So there really wasn't an investment per se. It was actually illegal to own in the US. So there's been, by my count, only four gold bull markets, this one included. The early 70s, the late 70s, the 2000s, and this one. Some people count the 70s as one big bull market. So it really is relatively new as an investable asset. But this market is different. This bull run is different than any other that there's ever been, because it wasn't driven by Western demand or really even investor demand. It was kicked off primarily by central bank demand. And, because of that, there were a lot of unique characteristics. There have been a lot of unique characteristics to this bull market. Typically, you see mining shares participate and leverage the move in gold. Typically, you see silver leverage the move in gold. But that did not happen for much of this move, which is now about 14 or 15 months old. That's because central banks don't buy mining stocks. They don't buy silver. They buy gold. So gold started moving, and the Western investors, retail and institutional, were kind of in disbelief and agog at some of the early moves and did not participate, waiting for a pullback. And as you mentioned, all of these pullbacks have been very shallow because they have not been driven by, the typical swings in investor emotions, from euphoria to despair and back again. The swings in the market have been, again, unique from what we've experienced before because they're being driven by geopolitical considerations, by central banks, by nation states buying gold to gain independence from the dollar and the weaponization of the dollar. So pullbacks have been shallow. The central banks and sovereign states have been coming in on every decline. And it's really been interesting. As you say, we've started to see physical demand in the West. I kind of subdivide Western demand into retail and institutional. And I think the inflows into GLD, the big gold ETF, that's the best proxy we have for Western demand. I think that's been primarily institutional. I think, the typical retail investor tends to buy physical or really has an impact in the physical market. And that's been really just like crickets in the US especially. Very little physical demand, if anything, more selling than buying. But we started in last summer to see some Western flows into the gold ETF. And then we had a serious post-election correction in gold, really the only significant correction we had in this bull market. And now we're starting to see those flows into GLD again. The important thing to me is that we have seen since the beginning of this year, the mining stocks leverage gold in really the kind of the classic fashion that you expect. Gold went up about 16% in the first quarter, which led all other asset classes and sectors except mining stocks, which about doubled that performance. So we're starting to see Western investors come to the party, but instead of coming so much through gold itself, they're choosing to play it through the mining equities.
And I know gold gets a lot of the spotlight, but you brought up silver, and I am a big fan of silver, so I want to touch on that market a little bit. What we've got the gold silver ratio, it's been over 100 for quite a while now. I think this morning we're a little bit over 99. A lot of people look to that market because that just means silver's that much cheaper relative to gold. So and the market itself, if we look at the technicals, the market's been coiling for a while. It looks like it's about to spring one way or the other. What are your thoughts on silver here?
Yeah, I tell people all the time, if you like gold, and you should, then you should love silver because in every long-term bull market in gold, I mean, this is a simple a rationale as you get. In every monetarily based, in other words, a bull market in gold that's based on monetary concerns, inflation concerns, currency depreciation concerns, which is really the only kind of long-standing bull market in gold. But in every such instance, silver has outperformed, has leveraged gold quite significantly. So by virtue of that fact alone, I expect silver to dramatically outperform gold, in the months ahead. It has had a late start because again, the beginnings of this gold bull market were unique.
And then your thoughts on the platinum market. Got to touch them all, right?
Yeah, historically, platinum and palladium have been considered, well, they are precious metals. But years ago, way long ago, when I started in this business, they were considered monetary metals as well by virtue of the fact that they were precious metals. But over the years, I think they've lost that monetary cachet to whatever degree they ever held it. And I think they're purely considered industrial metals. At least I consider them industrial metals now, with some very interesting and important applications. But I would lump platinum, palladium, in some of the more obscure offspring like rhodium, et cetera, kind of the same place I would put rare earths, critical metals, critical for industry for their very specific applications, but really driven by classic supply-demand factors more so than the monetary metals, which are gold and silver. And in that respect, the crucial thing to look at for platinum and palladium are the supplies, which are typically hard to find and generally speaking in not the best regions of the world.
So, Brian, this going back to gold, this is going to be a little bit of an off-color question, but I'm going to ask it anyway.
Best kind,
Just
love it.
Does the U.S. still do they still value their gold reserves at $42.22? And why?
Yeah, yes, they do. And there's been some talk that, when Treasury Secretary Bassett talked about how the U.S. was going to monetize its assets, everybody immediately went to gold. And it took him a while, but he eventually came and said, that's not what we're talking about, which probably was confirmation. But anyway, they they could. And if they did, through some kind of arcane balance sheet transactions between the Treasury and Fed, they could uh, realize something like 750 to $800 billion of gains to the balance sheet that would then give them some debt relief, change the statistics at least on debt per GDP, et cetera, or deficit to GDP. But kind of a gimmick in my view. It really, what was interesting to me is that didn't alert anyone or create any concerns that they would actually sell the gold, because I think that would be, and I think it's widely considered that that would be a sign of weakness, especially when other central banks are busily acquiring gold and building their gold reserves. The interesting thing, if you look at currencies and assets as a share of international reserves, the dollar has actually been dropping, and gold over the past couple of months actually surpassed the euro. So gold is actually in second place, and that trend line is rising while the dollars is falling. It would still be a while at these rates before they cross, but gold is absolutely becoming a very important component of international reserves.
Yeah, that makes sense. By the way, Tracy, we have a CPI number, I think, hit the street. Did you see any of the data?
So absolutely, yes, we have. So CPI came in at, hold on one second, to move everything. Zero month over month came in at 0.2%, and year over year at 2.3%, expected 2.4%. So in line, not going to move the markets much.
There you go, another nothing burger. But that begs the question, though, for Brian is as futures traders, how should we interpret the data like the CPI, inflation related data, maybe inflation 2.0 around the corner, who knows? Maybe not. How could we use that as to generate a bias for gold and silver price direction?
Well, the interesting thing has been for quite some time, and up until just recently, that the Fed drove the markets before we had the trade wars and the tariff kerfuffle. Everybody watched and interpreted the tea leaves as to what the Fed might be thinking, because that was the font of all the liquidity that drove all the markets. And and so higher inflation was deemed negative for gold, bearish for gold, because it would prompt the Fed to either raise rates or stand pat. And lower inflation was deemed bullish for gold. And this is absolutely opposite of what the classical interpretations had been forever. So yeah, these days higher in it's still in place to some extent, but the other factors like tariffs and their potential impacts on inflation, the potential for recession, et cetera, are some of the more important data points for the markets and especially for gold.
Yeah, that makes sense. We have a little bit of time left, Tracy. Any last minute thoughts on your mind?
Yeah, I'd like to touch on the miners a little bit, particularly silver miners, because they have definitely been lagging the market. So I'd like to get some insights on the miners a little bit from you.
Yeah, the silver miners in particular, or in general.
Silver miners in particular, but general as
Yeah,
well.
yeah. The silver miners are a rare breed. There's not that many big silver producers. 70% of silver production is actually as a byproduct of other metals, primarily zinc. So there's very few ways, pure relatively pure ways to place silver through the miners, and the ranks of those miners are really narrowing because there are mergers, big mergers happening. One that was just announced yesterday or the day before. But I think the silver, I like silver. It leverages gold. I think silver miners, I know silver miners leverage silver. So if you like the fundamental macro story, if you believe that still has a long ways to run as I do, then you can leverage those moves with, essentially unexpiring call options on silver and on silver miners. So with silver miners, you're leveraging leverage on top of leverage. And that's a great, high-powered way to play this macro trend and this metals trend. Generally speaking, gold miners are another great way to do it. They are absolutely spitting out cash right now, and by every measure, they remain seriously undervalued, significantly undervalued, especially in relation to where the gold price is. So lots of torque available in the miners, I think, now.
Very awesome. Brien, thank you so much for spending time with us this morning. Folks, smash that like button. Come on for Brien this morning. I cut and paste his Twitter link, I'm sorry, X link into the chat. So it's a great follow. But then again, so again, Brien, thank you so much for being here.
Great to be
Thank
with y'all.
you.
Thanks so much.
All right, all right. We are ready for the man from Arizona. Pharm is in the house. Tracy, we'll see you soon. Pharm, how's it going, man?
Good morning. Doing all right. How are you doing?
Pretty good. I woke up this morning and there was no gap anywhere. It was unusual.
Yet. Wait for it. Yeah. So looks like we'll see if this move sustains, then yeah, guess we'll be opening above yesterday's high again. So we'll see. There's a lot of morning left.
That is true. And CPI just kind of fizzled, right? Nothing, it didn't seem like it seemed like a consensus. It was a sweet CPI number.
Yeah, I mean, the expectation was put in at what, 0.3, I think, and sometimes they lift it just a little bit or round up with the expectations, make it a little easier target to hit when things are going
Yeah.
well for the market. I don't know. But yeah, I mean, it was fine. Clearly my wife's spending from this month hasn't hit yet. So I would be very concerned about next month because we went a little crazy for our cabin. So but yeah, it looks okay. And I think, the things that you need to worry about are, if the market cannot bid on seemingly good news, right? That's potentially a problem.
Yeah.
Just like markets tend to bottom or find swing lows on bad news, and sellers just can't find the sell button. Like to me, like that's really kind of the major, or I don't even want to say major risk here, but it's something to keep an eye out as we come into some very strong spots here. So
Yeah. It's funny. I was joking with Tracy about, and you kind of just hinted at this. Who creates who are these consensus people, right? And who are these forecasters? Who are the consensus people that give us this data?
yeah, I mean, they didn't call me and ask how household spending went. So, I mean, I don't really give it any credibility at all if they're not doing that. So, but yeah, seriously, point
Yeah.
0.2, 0.3, 0.25. Why is there never a second digit in the expectations? Like we've been talking about rounding errors in CPI for at least a year. So, let's be a little more specific, at least if you're going to call something
Yeah.
out.
It's funny. I front run three purchases. I front run just because I was a little worried. I'll admit it. A car, a refrigerator, and a pool pump. I bought them already. I was like, I don't know what's going to happen in 6 months. This is, I'm going to change my plan, and so I did it. So my guess is a lot of people did stuff like that.
Yeah, we did a little bit. I mean, we did just buy a cabin. We've been working on it for the last few months, and I was gonna put off appliances, and I was like, okay, well, we might as well go get them because you just never know. I mean, it could end up being a thing where if you end up having to wait a few months when you finally want something, whether or not a price goes up or not. But so we were going to be spending anyways. But yeah, we did a little extra, did a little bit of pull forward. So we'll see how next month comes in.
Yeah, for sure. No, I noticed yesterday though that the Russell 2000 loved this, loved the news more than anybody else. And today I think that's continuing a little bit more to the, their percentage by percentage up
Yeah.
a little bit more. Is there any clues there with that?
Yeah, I mean, I was looking at the Russell pre-market, and like you mentioned, percentage-wise, it was up nicely. I will say, so when I look at relative strength in the morning, I look at it a little bit different than percentage-wise. I'm looking at it structurally. How does it compare versus its prior day's profile, for example? And so from that perspective, Russell has remained relatively weak. But percentage-wise, it was up the most, right? So you look at it and say, well, this looks good. But right now you have both ES and NQ trading at or above yesterday's high, including the overnight high kind of right there. Russell's not even close, right, to its 3 a.m. high from yesterday. So it's still well within that range. On a cash hours basis, it just did wick yesterday's high, just barely, and pulled back in. So yeah, that'll be interesting to watch and see how Russell responds to this because the market's got to be in a really good mood to bid that piece of trash, right? So, if that can't bid, then that's just normal because it's a turd. But if it is bidding, then I would see that as a bullish sign for markets in general, or at least a risk-on sign.
These are just our small cap children trying to find their way in the world.
Yeah, yeah, just shoveling money into incinerators day after day. Somebody's got to do it, right? It's a tough job, but fires the engines of the economy. So got to keep those fires hot, right?
Yeah, yeah. Yeah, I think the Dow is taking it on the chin a little bit. Just a brief headline about I think United Healthcare has a C-suite shakeup going
Mhm.
on, and that just destroyed that whole that whole index right there, and just like that.
Yeah, and that's interesting here as we come into options expiration, and particularly, and I shouldn't be talking about this stuff. I'm an idiot, but basically when you've got, we're somewhat pinned to the upside on the index, right? Like +2 standard deviation, Bollinger Bands. We're in a supportive gamma environment into options expiration, and so you tend to get a lot of dispersion in those situations. And so a lot of times you get something like the Dow, gets crushed, right, on some kind of a news. Well, that then means something else has to bid as an alternative. And so that's where, sometimes you can see an additional bid to like the Qs or, ES. And like even within the Dow, that's going to hit, like your healthcare stocks, right? So like maybe energy
Yeah.
bids today. I mean, who knows? You would think that energy would be a little bit more aggressively bid on a hotter CPI number, but crude's responding okay. So yeah, so maybe they find something else to bid, but that's something that I keep an eye out for. So it's like a situation where if the Dow is struggling because of some kind of news, and then NQ and ES sort of top out and can't bid, then I think a little bit more patience is warranted on the long side today, because those are the exact kind of things, just soft things that I look for, where you get some good news or what should be good news, and the market just doesn't want to go up. So that's definitely something that's on my radar into these spots that we'll drill into in just a minute here.
Yeah, so I'm looking at an E-mini S&P chart, daily chart right now, and I was surprised at the stat when I saw it. We're down a little bit over. Again, I'm using the continuous back adjusted E-mini S&P chart, daily chart. We're down about 5.1% from the highs in February as we speak right now. And I'm looking at just kind of structurally looking at this kind of a paused candle right now for today, baby candle, no body whatsoever, just kind of waiting for the open, I guess. And I'm in my mind, I'm thinking these all-time highs aren't that far away. Is there a move afoot in this market to make all-time highs again?
Yeah, it's on the table here. Again, this big spot. I would call it, 58.80s to 59.30s. That's the hurdle. And to me, if we base above that area, then there's nothing stopping it, barring some change in news or data or what have you. But this is it. To me, from a technical perspective, really the last line that's keeping this thing from all-time highs, which would that would have a lot of people smashing their phones and computers and all kinds of frustrated, but is what it is. Market's going to market. So really, this is it. This is the big spot. These kind of next 50 handles from this current overnight high, either stop here, come in for a pullback, or if you can just rip through here. And it's hard, right? Like NAIM hit 82 last week, and that's a little bit laggy. My internal NAIM is about 92 probably. I just kind of ballpark it in my head, like how much buying has occurred since that last print, etc. So the money's kind of getting it in, right? So that's kind of why the prior balance for 7 days, that was healthy. I would have preferred a little bit more of a pullback first. Even just like 3%, 5%, something like that. Just gives some fresh hands a chance to get in. Because now again, it's just not a great look chasing the highs. But if the chase can end up sustaining a bid above these 58.80s up to 59.30s, and any subsequent pullback that does occur just holds above there, then it opens the highs. So really, this week is it in terms of all-time highs on the table versus pullback first and let's see.
Yeah, it almost, if you take a shorter term point of view, it almost looks like a little bit of a double top right now, even though we traded above this high on the 26th of March. So it's kind of like a classic kind of, you use your imagination, V-shaped pattern. And so I think in my mind anyway, when I look at this, I'm thinking, all right, we need some higher closes. And I just marked that 59.30 level on my chart. So we'll see if we could achieve that in the next, maybe this week, who knows? But like you said, options expiration week, sometimes it's funny.
Yeah, we'll see. The fact that it's already trading below the 8:30 open is kind of not the best look, but we'll see how things go when we get into the charts here.
Yeah. Yeah, let's pull one up, man. Let's pull your chart up.
Yep, so I've got mine up here. I don't know if looks like, there we go, center view. So yeah, here's a spot that we had on there yesterday, roughly 58.80s. I've got 84 to 98. And if you're an SPX trader, that roughly corresponds to a really key support resistance on SPX, which was 58.65 to 72. Just an absolutely monster spot. And so that's going to sit in this range here today. And so that's one of the key spots that I'm watching. So if we just flip over to the 30, you can see that stalled out in those 80. So here, and then let's say 7 handles above this high, I'm not initiating along anywhere near there. I would much prefer to be long from lower. And so to me, this is tricky, honestly, because you don't want to see a failure to bid on CPI. You'd kind of rather, on a soft CPI, right? You'd kind of rather this open on a true gap up. We still got 45 minutes, so we'll see. But if we do open above yesterday's high, and to me, the cash hours high, we had a spike yesterday, so 62, 66 range on a cash hours basis. Opening above there would be a good look. You'll see that on my 5-minute in just a minute. I don't have that level on there for this chart. I kind of feel like you have to open there, but then at the same time, I'm not going to be over eager to slap along anywhere near this spot. So you saw yesterday, we had the big gap, and then we got that pullback inventory correction at the open. We dipped into those overnight singles and then just kind of ripped face from there. So I would like to probably let the IB set today. That's the first, that's the range of the first 60 minutes. And see what happens, because again, I'm not looking to initiate along here. What I would consider is perhaps, we trade higher through this range and then see kind of some weakish reaction from sellers, right? That then puts in some kind of higher low above yesterday's range. But bulls have the ball here if they want it. So let's just take that ball and run with it, right? And if they can't, then I get a little bit cautious into the rest of the week. But as of now, everything looks great. We're just making higher highs, higher lows on a daily basis. And so until or unless we are taking out a prior day's low, overnight low, both, with continuation, there's nothing doing really for sellers. So, I mean, even if we did come down here and sweep out yesterday's low and then just reclaim it, we're forming kind of a nice balance profile this week. It looked like it might be forming some kind of a double distribution. It's way too early to talk too much about a weekly profile. But there's nothing really bearish to be seen here other than the fact that I'm not looking to initiate longs up into this spot up here.
Well, is there anything that could happen during the initial balance that would spark a short trade idea?
Yeah, depending on where we open, right? So if we do open above yesterday's cash session high, which was 66 and a quarter, you could potentially monitor that like quick after hours high, which was like 76 and a quarter. But I mean, if we do open above yesterday's high, and similar to yesterday, we just can't bid the open, right? And the opening print can't bid. I mean, we didn't end up bidding yesterday's open until like the end of the day. And so it remained weak for most of the day. You can probably see that a little bit better on my 5 actually. So I'll go back to where was yesterday's cash open here. This is my time. Yeah. So I mean, you can see we just got an open, just a quick wick on those first 5 minutes. And then it was just straight down, right? So it'd be the same type of situation. If you can't sustain a bid above the open when you are opening above a prior day's high, then you're probably going to have to be a little bit patient on the long side, and that does potentially offer short. I'm not like super excited about shorts generally when we're making higher highs and higher lows on a daily basis. It kind of does have to be reactive like that, right? Like you see the open and you see it back tested from below after that opening range sets, whether you're looking at your, a 30-second opening range, 1 minute opening range, 5-minute opening range. Different traders use different things. Then you can try to take a tactical short there. But generally below, the 62 spot, we were looking for rotations towards like at least 40 to 44. I actually took that off my chart just because it was somewhat redundant with this 34 to 37 spot from yesterday. But generally, I think if we're offering 62s at the open, we're probably going to find rotation towards the overnight low. Given bullish trend, I actually probably would put that 40 to 44 spot back on my chart and expect that probably sees a bid. So to me, that's really the only way that I could take a short in this situation outside of just like some naked short that's fully reactive that, we can't plan right now. But up in this area, if you get some kind of look above and fail of this overnight high, that would be your next short setup. And you need to see buyers exhaust out. And that would be the best way to sort of end this uptrend, at least in the short term, would be to have a cash hours high as opposed to an overnight high like this currently is. Maybe we come in here to like 58.92 and then reverse back below 84s. And then like you can be careful with a short because you are then running into yesterday's high, and it's objectively a long as yesterday's high holds. So you're kind of keeping it tight and you're covering quickly. But then if you do get traction below 62, then you do get the possibility of coming down to the overnight low and then potentially yesterday's low in some kind of an engulfing day. And that's just if that would be a sign where buyers have exhausted out. They just can't lift this spot. Again, we have a subtle clue that perhaps we're seeing some fatigue given we got a good CPI and it just didn't really want to bid. So like I'm open to that, but again, shorts to me are generally reserved for more reactive traders that have a good feel for the action when we're making higher highs and higher lows on a daily basis. If I'm a bull, I would actually prefer that this open below 62 and not open above yesterday's high. And the reason is because this isn't a fantastic high being, an after hours high necessarily. And it gives stronger bulls a chance to buy like an actual dip like they did overnight. I mean, when you trade lower first overnight and you're in a bullish trend, I mean, it's going to get bought like 85% of the time. So trading lower first is very often more bullish to me than trading higher first and failing. So that's where I look where I'm cautious on with longs. If we trade up here first, we just can't do it and fail back into range. then I get a little bit cautious, and I probably am a little bit more interested in pressing the sell button. But for me, even if this kind of fails up here and bulls are a little bit sleepy, and this pulls back in, some kind of a look below and fail of this overnight low, I think works. And taking a reclaim long of like 37, you're probably getting rotations up towards 60 anyways, if not yesterday's high and then the overnight high. So that's why I like to see, generally outside of reactive trades, I want to see that IB set, that first 60-minute range, because it gives you an idea of what participants for today are doing, like the big money. I mean, most of the volume takes place in the first 30 minutes, second 30 minutes, and then of course closing bell. And so seeing how those traders position can give us a lot of information. You can see how that paid off yesterday. The IB low was set just above the overnight low, and we talked about sweeping out, or not the overnight low, I'm sorry, but this pullback low here. And we had talked about that as a potential long, and like just sticking the IB low right there just made it even better, because then once this was swept and reclaimed, the IB low was reclaimed, and then it opens everything up above. And so that's where, like, if you were trying to buy the dip all the way down, probably didn't work very well, but having a little bit of patience works out.
Yeah, what's interesting overnight to me is, I mean, we have, the point of control for the session is right at that 58.50 level, which is the highest gamma exposure level on the future side of things. It's Jack's one right there. And that's that sweet spot. It's already happened overnight in terms of a volume profile. I'm not so sure that's not going to act like a magnet later on, or at least in the initial balance.
Given this sort of flaccid bid here, that wouldn't surprise me at all. I mean, we'll see if we get some kind of additional, news, or if bulls wake up and have a few extra cups of coffee here. But so far, it's a pretty weak move on a soft CPI. And let's take a look and see what crude. I mean, crude still looks good. Bonds, really. I mean, ZB kind of sold off a little bit. Let's pull that up here.
Yeah, down around 11, 30 seconds.
Crude still strong. I mean, basically at high of sessions. That's not bad.
Yeah.
I mean, why is EB down on a soft CPI? So that's concerning to me too. Like when I see something, do you remember ITB, that basically since maybe November, December? I mean, it's a rate sensitive sector, home builders. And it was like, it didn't matter if rates were down, it was down. If rates were up, it was down. It was like, this isn't like this. I mean, this thing's in trouble, right? And so that's kind of something to pay attention to, I think, on the long end. If you get some kind of soft data, it's not like it was crazy soft, but it was soft.
Yeah.
And it can't bid. That's kind of a problem. And I see this playing out potentially, over the next couple of months. If the long end of the bond market becomes a problem, then it could be a source of weakness for equities. So, I mean, we'll see how that goes.
But,
Definitely watching that.
Over the last, I don't know, ever since, I'm going to go back to the end of last month, when we had that crazy positive correlation between the 30-year and the S&P. Now it's reversed course all the way back to textbook, right? We're way negative on that correlation. And I always felt that in this kind of environment where it's negatively correlated like it's supposed to be, at least according to the textbooks, I always felt that the bond market was smart. I'll use the word smarter than the other markets, but just seemed to kind of give us some directional bias sooner than the other markets.
Mm-hmm.
So the fact that we're down a little bit here, to me, suggests maybe we will get a little bit of a bid on the open in the S&P.
Yeah, I like that kind of sooner idea. Equities can bid when bonds are down just fine. Really, they'll react when there's a major technical break, right? So I mean, like day to day, if your bond yields are up a bit or down a bit, it's not going to mean like a whole lot. But until you start seeing those technical breaks, and at that point, I mean, equities can't ignore it. You always have to ask yourself the reason why something is up or down. Some kind of macro corollary when you're trying to interpret that into the S&P, because like you said, we had bonds bid, yields down to start the sell-off in equities, right? And that's because the narrative at the time was growth scare. Whereas 2022, anytime ZB would get smoked and yields were screaming and the dollar was up, then equities were getting killed as well. And that was just the environment. So understanding the market environment that you're in, why are these macros, doing what they're doing? How does that fit into the market narrative? What are equities going to do? So just things to watch kind of big picture. You don't need a ZB chart on the 5-minute and watch every move and try to trade ES off of it, though. That's for sure.
No, but we have a long-term area of support at 113 even handle. And so I'm looking at that. We get a break below that, and that could be that technical trigger that you mentioned.
Yeah, that's interesting. And definitely going to have to watch this and see if it can find its feet here. Because, how else are you going to get bonds to bid if a soft CPI is not going to do it? You know what I mean?
Yeah, Pharm. It was great talking to you again this morning, man. We don't need Delhi back, I don't think.
No, he can skive off tomorrow too, right?
From what I know, he'll be back in full force, ready to go tomorrow. So looking forward to having him back. Any event, thanks for being here with us. We're gonna move over to Tanya Trades. Tanya's in the house as well, and we'll see you tomorrow, Pax. I'm sorry, Pharm. I say Pax. Tanya, good morning.
Good morning, Jim.
How's everything in New York these days?
Oh, it's going good. Finally, we're getting some spring weather, so I'm happy. Yeah, the winter is over. Now we got spring finally in May, so I'm excited. Um, and yeah, can be happier honestly about that. So even if say the market's kind of slow, we can go outside now.
Yeah, well, for now it's slow. We'll see what happens because we could have unplanned news from Capitol Hill for reasons we haven't even thought about. You never know these days.
Yeah, exactly. So you always got to stay nimble. Um, Yeah, in today's CPI, we have like Pharm said, we had a pretty soft, pretty weak move there. So
Yeah,
gonna be an interesting type of tape there. We can go ahead into the charts now.
excellent.
Um, so this is NASDAQ. We've been stronger in the NASDAQ, definitely than ES by a lot. We completely took out this April 2nd high last week. And then we took out this March 26th high, which was like the entire, basically this entire swing down lower. And yeah, we already were gapping up like plus 3.8% yesterday. And we held up. We had a pretty strong close there. And today with CPI, it just took out like yesterday's high. And we'll definitely have to be monitoring whether or not we're staying above it or not, right? So, um, it's pretty hard. I do like that we're kind of if we're gonna just kind of stay and consolidate for a few days, even on like the 4 hour, the 1 hour, that's good and that's all fine because like it seems that everyone is bullish, and sometimes it just takes more time for that to develop and shake other people out first. So, and to develop the volume profile, or like you guys like to say. So definitely not loving totally the CPI. I mean, we took out yesterday's high. We can then retrace back lower, and we'll go into the 4 hour now to see what's going on there. I definitely want to see what happens at 10 a.m., how this candle's going to close. If it doesn't close cleanly above, then we could potentially get a retracement back down into like yesterday's 2 p.m. low or something like that. This swing low here. Because that'll just be like kind of a consolidation play. If we can't hold above yesterday's high, we can come down and retrace into this area. This is a swing low into a liquidity pool. We still never really retraced too much from into yesterday's leg. So here we are. Then we can go down to the hourly. And yeah, that's basically what I'm looking at here for sure. How are we going to react here? So far, that 15 on the 15, you can see how. Yeah, CPI definitely swung both ways like that. There's like that 15-minute doji there. I'm definitely gonna have data lows as like a first target if I'm gonna go short here. You can just look on the 1 minute here. Yeah.
So you just targeted the low of the CPI candle, right?
Yeah, that would be a nice first, like, then if I were to short, then that'd be a nice first target, like an easy target, I would say, because the swing low and liquidity below it, just it's a swing low with like a fair value gap below it, and also I mean, a lot of the times I do like to mark out data highs and lows because those end up getting taken later on, especially if they're abnormal wicks like that. So definitely gonna have that marked out, and then from there I'll see if there's more continuation to the downside. We're definitely still nice and bullish, but if I want to see some sell side swept, there's this crazy trend line going on right now.
Yeah.
That I'd rather get disrupted a bit before otherwise I'd feel like I'm definitely chasing price there. I wouldn't just go long here. So
Yeah. We would call that an orderly move up.
yeah. Yeah, exactly. I don't know if the price has not been very orderly. I believe, or doesn't like to be. Like you can see
Right.
here, we took out this low in this first before we ended up last week before we ended up going back up higher. Um, so the little gap and go. So let's see here.
I mean, that gap just seems so far away, but yeah, on any given Sunday, anything could happen.
Oh yeah, this gap. I just like to have this gap opened up just in case we ever do have like a bearish structure break and we can have continuation. But yeah, the first thing I would just target is the CPI low, and then I'd see from there if we're gonna go have more continuation, and especially this here. This is another low. I'd target next. But if it would be totally fine if we just kind of sweep that data low here and we hold up in the morning and then we could go higher. That's what I would look for the bull side at least. Um, but if we kind of close below this, yeah, and I would just go for the next sell side target, which would be this low on the 15-minute or the hourly here, this 1 a.m. low. And then I'd look for how we react to this zone there. If we sweep this, would we close below this? And if we do, then I'd go for this. But other than that, like that's for like the idea if today, if we can't stay above yesterday's high, and if we continue having our bearish structure, then I go down for the downside. So I'm gonna take a look at ES.
And by the way, just in both of these markets, the ES and the NASDAQ, if we do catch a bid right off the bell, then what's going to be your reaction? What are you going to be looking for?
Yeah, if we do catch a bid off the bell, I would want to see that CPI high taken and still like showing us staying above yesterday's high. Yeah. And then I'd look for more upside from there using standard deviations depending on where the last swing low was. So let's see here. Let's just mark it up on ES. Yesterday's high is there. It's definitely a bit different, a little bit weaker. Nasdaq's been the strongest sister.
Yeah.
And then so like what we were talking about, yeah, I'd want to see us like how are we reacting towards if we're gonna build around this area essentially, yesterday's high. And I guess yeah, you can have an orderly move up. So it's more difficult in that sense, or because I like to look for manipulation. So if we just go straight up, it'll be just a tougher tape for me at least because I like to wait for a sweep first. Let's see here. This is the data high, and it all depends on like how we react at the data high. If we continue and we build sort of in this area between that data high and yesterday's high on the daily, yeah, that I'd be looking at just sort of standard deviations from this low to high, and then seeing if that matches up with anywhere on the daily app here. And where's the next swing high on the daily? We have the good ways to go.
Yeah.
Like we could go to, yeah, we can go to 6,000 again. It's totally possible. Or I'd go for probably like 59 35. It's like this high here, or this, which matches up with this low. Yeah, it's not really my biggest, like, what I really want to see today if we end up just going straight up again. Plus it would be kind of considering how we already reacted there. Yeah, I wouldn't really love that. I would rather us sweep out some lows first, especially that this move up has been, like you said, very orderly. Um, but yeah, that could happen. We could come back into this 15-minute FEG too. Let me just take out that fib. So essentially where we end up retracing to, I'd like to see us respect, for a nice strong move up, I'd like to see us respect this, honestly. If we the close on the 15 minutes, because then we might end up disrupting that bullish structure and like that trend line that we just talked about. I'd rather us just sweep it. If we end up closing below it, then we could be looking at this Asia low. That's totally
Yeah, I
possible,
mean,
giving the daily.
yeah, there's kind of the big gamma exposure level on the future side, and the S&P is at 58.50. So I'm kind of keeping my eye on that. It's right below your rectangle there. So
Yeah,
it's
yeah, I see 58.50. Yeah, that's a good, nice round number, honestly. I could
yeah.
s- uh I could see that this is like kind of the last, this is the swing low, that's the last line in the sand. There's a FEG below it, and there's other highs here. It looks like it's a
Yeah.
sensitive area that they probably, yeah. Um, yeah, exactly. Yeah, today, I mean, I'm coming in kind of neutral. I mean, I'm sure, have we asked the chat today? I'm sure most people are bullish.
We do have a poll. Let's see what the answer is. 55% bullish,
Yeah.
23% bearish, 22% neutral.
Okay. Yeah, sounds about right. Especially when you're opening up like this.
Yeah, I mean the textbook said. I mean now we're way miles away from any textbook markets. I'll use that as my disclaimer, but the text mark says after this big strong green candle, we should get another drive up. We should get another green candle up. Maybe not as big. The order of magnitude will be
Yeah.
less, but that's what the textbook says. But we've seen just all sorts of strange things happen. So who knows?
Yeah, I mean that's totally I mean the chat is right with us like how strong we look on the daily there. We are holding up the upper half of this candle. Even we're holding up yesterday's high pretty well, decently well. So I'm neutral, slightly bullish, but also prepared if we do end up retracing a bit more. If it wants to consolidate a bit, kind of like yesterday's, like on the hourly, just because I do really want to see how we close here on the 4 hour. We're gonna close above. If we kind of wick it again, it'll be kind of like yesterday here, like a wick then retracement into the range type of move, which is why I'm not like, it's not out of the question to start to look for lower if that happens.
Yeah.
And yeah, that's good. That's the
Yeah.
game plan.
Hey, Tanya, Prof Turtle FX asks, what do you mean when you say liquidity void?
I look for areas where the candles are not balanced, so we haven't repriced to that area yet. Yeah, so for here's an example. This is a low, and you can see here we never repriced through after we surged up above these candles here. We still have this low. I mean, we still have this area here that we haven't repriced through on the 15, and you can see on the hourly though. If I look at this fair value gap here, right, this is it, but we didn't completely reprice through it. So if we end up changing structure, then I do look at a low that still has an area to be repriced to. Many times that ends up working out pretty nicely. Like you can see here, this is a low here, and we didn't completely reprice this. Right, it repriced to here, and then you still have this much left. And then once we broke structure here, this was an easy target, easy salad target. I don't know why I'd like to say that. But and then we did end up, and then even this one next, yeah. So end up wicking here. I think this was like this was probably CPI or something actually. I mean, no, not FOMC, sorry. Today is CPI. So that's what I mean. It's like that's what I'll target next is a swing low with liquidity below it. Because if we haven't repriced, like, yeah, right here, I mean, this is a swing low. We surged all the way up on this candle. We haven't repriced below this in this area. So if it ends up shifting structure, then that's a potential target to go for. And yeah, that's my answer to that.
Awesome, man. Well, I appreciate that. Turtle FX, hopefully that helps. Tanya, it's great talking to you this morning, as usual. Are you going to be back? You'll be back with Deli tomorrow. He's back on Wednesday.
Okay, cool. Glad to hear.
Yep. All right. All right. Well, you have a great day. And again, thank you. And we will see you tomorrow.
See ya. Have a great day.
All right. Coming up next, the man, Dread Pirate Merritt Black, is in the house. Merritt, how are you?
Good, Jim. How are you?
You got some cool action music coming to introduce your segment. I love it.
Great music, horrible picture.
Oh no. Oh no.
I hate all pictures of myself. I don't know if any of you out there share that, but I don't like the look of it.
Dude, I'll tell you a story. When Deli and Shab showed up, they sent me to a photographer.
Same.
And I had to, oh, did you? Yeah, I had to pose, and it was the most awkward moment of my life, easily.
Yeah. They were like, give me a personality shot. I was like, what's I didn't know what to do. Yeah, it was good times.
I'll give him the finger. It's my personality.
Yeah.
Oh man. Anyway, well, it's good seeing you, man.
You too.
What do you think about this, huge rally, all the tariff pandemonium, and now a nothing burger on CPI?
Yeah, just staying focused on process, man. There's always outside information. There's always some news cycle that everybody seems to think is the most important thing. But to me, the most important thing is process and methodology and managing risk and keeping my mind sharp and my ego checked at the door, So those are the things I focus on.
Yeah, very awesome, man. Well, we're looking forward to watching you today. It's always excellent when you're here. We appreciate you being here. Smash that like, don't hit it. Smash the like button.
Smash it.
For Merritt, also for Tanya. Come on, she was gave us some great intel. So smash that, and Merritt. So I'm going to let you do your thing and be taking notes. And good luck on any trades.
Thanks, brother.
All right.
See you, bro. Good morning, good morning, good morning. Hey, Tracy. Ferris, Archer. What's going on? So, what do we have going on here in the in the NASDAQ? Not a whole lot, right? As Jim just alluded to, we had this kind of anticipated CPI number, and I don't know what it was or whatnot. I was running around this morning with some technical issues. But I know that the market doesn't care too much about what happened, right? We can tell that by the lack of movement, the lack of a frenzy. Speed of tape is something we often talk about. So to me, it's looking like a potential quiet session. We've reached areas once again with some of the. It's like every Tuesday when I come on, I feel the past maybe 3 weeks or so, I feel like NASDAQ has reached into an area where it makes sense that there could be a pullback. So, I'm not overly bearish. I am keeping my eye. Let's get a little drawing here. Highlight Y. Let's just highlight this area around, whoops. Oh, let's delete this. Area around 0 for cumulative delta. So that's just something I'm watching here. Is that, we had the sell-off overnight, then we started to have a little passive buyer, right? Sellers kept pressing, price not going lower. And we obviously found buyers, a lot of buying, took us right back to delta neutral, which is kind of where we capitulated into this high. And then a whole lot of nothing. Delta's absolutely flatlining, but the retest is from below. This is a moment where sellers can maintain what we might call contextual order flow control in terms that me and my students and traders use. So we'll keep an eye on that. But in general, not a whole lot to lean on. We'll see. Well, 30-minute chart here just to get a sense of where we've been. We were in kind of a balance here for a bit, broke, a little bit of balance, little resistance area right here that we've broke and retested. So that's a nice spot to keep an eye on. Morning, James. We are looking at NASDAQ here, NASDAQ futures in Q. Let's take a look at crude oil. It's had some pretty good movement lately, some wild gyrations. Let's take a look at gold. Gold, there was a time, I think last year, where I traded a fair amount of, believe it or not, silver. I was trading a lot of silver for a while, and some gold. And if you just look at the way gold is trading short term, just look at all the bar to bar overlap, right? It's really a tough market to read momentum in right now. It's really not trading what short-term traders would call cleanly. Okay. There's just so much. Yes, okay, in general, let me get my little drawing tool here. Yes, okay. Decent rotation. Okay, we can kind of look at some of these. This is pretty good, blah, blah, blah. Like in general on that, it's pretty nice. But the actual nitty-gritty short term is really, really tough. And it's actually really, really terrible right now. You get all of this, right? This is not easy to trade. If markets moved like this all the time, right, we would never have a losing trade, because whenever there was a shift in momentum, you could get on board and you would not have a loser, because the shift in momentum at least meant that there would be some movement. That's the type of clean price action that traders are always after and seeking, but we don't always get. And so if you're someone who has been considering trading multiple markets, that's part of one of the things you want to go look for. It's not just about purely about the contextual environment, whether or not there's a good kind of play. I would say the technical setup, the context is a big, big deal. I would say that volume, or even better, relative volume, is a big deal. And then correlated with volume or relative volume is going to be how clean things are moving. Head back to the NASDAQ here. Sellers pressing us away right here, as you can see from delta neutral a little bit. We are 2 minutes and 50 seconds away from the pit session open. Dumb Destroyer, I like that name. Asks why long-term VWAPs over long-term volume profile. I use both. Yeah, we might have to pull up a little lean hogs, see what's what. I don't know if you guys remember, we were on a live stream. I was on the Order Flow Labs guys afternoon stream about a month ago. It was right before what we call that day? Liberation Day. It was Liberation Day. There's Leo. And I made a bet, and we were trading way below 20,000 in NQ. And I made a bet for all to see that if NQ did not hit 20,000, that session before the session close, I would just full port the account on Lean Hogs on my Tuesday stream. And somehow we went to 20,000, and then, as we all know, that was it right there during that speech. And that's where this current sell-off, I say current sell-off, it's a bull market, guys. It's a bull market. I think a lot of people are really slow to catch up to the fact that, we've been in an uptrend for quite some time here. Pull over this guy here. We'll do something a little different today. We'll take a look at some longer term stuff. And we will fix some colors. Doesn't matter. How about sky blue? How about it? How about cadet blue for the others? Great. And here's the opening bell. Price took a little dip down, but if you glanced at the delta during that time, it was not down. So again, this was kind of my point as we watch the open here. I'm not stalking any trades, but right here, you know, April 6th or whatever. What have we done since then? Higher highs and higher lows, guys, with one little stop run right there, which is opportunity. Little consolidation above these highs right here with the final little stop run below the lows before we go. Same pattern here, 2 lows, which is retesting prior swing highs, little stop run, and we go. That's what this market is doing. This is a 75,000 volume chart. Let's see if I can get rid of these vertical lines. It's not the break EOD, is it? I think we want to keep that on. That's better. So this is that area that we were talking about earlier that's important. And if you look at the global crosshair and you look at the short-term chart over on the right-hand side, you'll see that that's kind of where we're currently retesting. So this is really kind of the line in the sand for short-term. Does this continue, or the fact that we've now gotten a little extended, are we due for something of a pullback? To me, that's just a really, no matter if you're using volume profile, you're going to be seeing the upper edge of a distribution. You know, if you're using support resistance like I am here, you're going to be seeing that same area. So a lot of ways to slice and dice things. A lot of the very best ways of analyzing markets are often going to lead you to some of the same conclusions, if you will. I think one time framing is, and I'm a market profile guy. I think one time framing is a myth, an illusion, something that's easy for us to spot and talk about, but it's very, very easily testable in terms of not to get too technical, because I'm not too technical, but serial correlation, right? Does one thing happening lead to the continuation of that thing happening on, let's say, the next period, right, or bar? And the fact is that there is no serial correlation in financial markets with open, high, low, close data. So one time framing is a fraud. It is not a thing where when you look at it, it gives you an edge, which is the only thing that we're after as traders. Where can we get an incremental edge? One time framing does not provide any edge type of information. Fun little secret, not really a secret, but most people don't know. There is serial correlation with value migration. Drop an edge in the chat. Yeah, I don't agree with everything that Jim Dalton says. I certainly look up to Jim and appreciate everything that himself, Steedlemeyer, and the often unmentioned Don Jones, who I think was the real brains behind the operation. I had 2 different 4 or 5 hour conversations with Don Jones. The guy headed up the team that decoded the signals from Sputnik. That's that's what he was all about. He's a scientist, through and through a scientist, and the way that he approached market profile and studying it and understanding it was head and shoulders above anyone else. So, little update on the markets. What did we see? The sellers never really got a ton of energy. What was my comment right on the open right here? Hey, look, they dropped the price, but if you noticed, go back and rewind and listen to what I said right at that moment. The sellers didn't drop it with it, right? So we saw weakness from the delta relative to price movement, and we saw buyers come in strongly. Buyers came in strongly and held what the NADRO terminology is for a move from outside this one standard deviation band that comes back and touches it. In NADRO, we call that an imbalanced pullback. It's a way of accessing trades short term. If I was really bullish, that would be, as you guys have probably seen me on the stream, take trades like that. If contextual order flow had been different, if we had somehow been delta in like this, where it was above 0 and came back and kind of wicked it and came through, that would be a spot where I would have looked for some type of long scalp in that area. I wasn't doing so at the time because the contextual order flow was still bearish, as I started talking about when we came on the call. So now we've gone all the way up to the +2 standard deviation. It looks like we have yet to even one tick the overnight high. It looks like we just touched the same area. We've seen a little bit of selling come in, which would be natural from this place of the +2 standard deviation, of a decent rhythm up move, but we haven't taken out that overnight high yet, and we're really, really close to it. So it's probably going to happen. Daniel asks, do I have a good amount of successful desk traders at Apteros that mainly trade Asian or London sessions? Interestingly, I've got a pretty good contingency of traders from Spain in particular, some in the UK. Most of them trade a little bit during the EU session and then continue to trade in the US session. There's not some, I don't currently have a trader on the desk who only trades Europe or Asian session and doesn't touch the US session. I don't have a trader that does that. So now we've taken the overnight high. Let's see if that brings in a decent amount of selling. I'm going to check on crude oil real quick. The lows that crude left recently were not great. If you look at this, right? It's at an area that makes sense. You start out with some highs in this region, right? And then so this becomes an area where that's going to be thin, low volume. And so you've got the upper edge of high volume right there. And so, you know, when we start to retrace back towards that, which makes perfect sense, we just couldn't quite get to it and really test it and touch it. And instead, we put in this weak looking low right here. So it's a bit vulnerable. One thing we could keep an eye on today, if we were to take a look at the upper edge of this right here. Sorry, I can't draw straight today. This little zone. If we see something, you know, for a scalp, right, that begins to hold underneath here, we could get short, as Crudele likes to talk about, as close to our stop as possible, right? That ties in with my edge comes from the edges. You know, I want to look for a trade location as close as possible to that for a little short scalp where we could be the trader that's positioned to run stops into this little zone right here, below these lows and into this support level. So that would be a nice little trade. I'm not really interested in doing anything while we're up here. There's really nothing for me to do at the moment. Yes, Andrew, I'm by no means saying I think crude is going down, right? I was literally saying I don't have an opinion at the hard right edge on where crude is trying to head to. My opinion was if we hold, it's a scenario. If we hold below that area that I highlighted, if that happens, that will put me into full-on bearish mode as long as we're retesting and holding below that level that I drew, right? So it's a very specific scenario. If that happens, I will have a view and I will look to access that idea. And that's where we'll use short-term order flow, short-term price action, short-term little stop runs and price action patterns, and our standard deviation framework to access the idea, right? Okay, I love this question from Jim. If this, then that. If not, then what? Well, then nothing, Jim. I don't have a scenario. That is the key. I'm not, sounds like I'm attacking Jim there. I'm trying to help you guys because I care. I care too much about random chat. It's so important that you understand when and where you have nothing to do, guys. And it's kind of me right now. I've got nothing to do. And so you guys have seen me for the past, whatever, 8 or 9 weeks streaming here. And there's not been a lot of days where I have been not really doing much. I've typically come in with positions on and actively scalping and whatnot. Just not really liking the trade location, what I'm seeing in a lot of markets. It's not even reactionary. I think that's fine. That's a decent mentality. Someone said react, not predict. That's good. Even better is to prepare, then execute. That's really what we do. It's not react. I know a lot of times people say that with the best of intentions, and it's decent. I don't even like the word anticipate. I really don't like that one. It's not our job to anticipate is like a prediction, right? And it's really, we have to be careful when we use those words. I have a very negative term that I use for my trading when I'm trading poorly. It's anticipatory thinking is what I call it. Anticipatory thinking. We don't want to anticipate, which is too much of predicting, saying this is what should happen, this is what will happen. That's very dangerous as a trader. You don't want to just react because a lot of times that leads to just a lot of shooting from the hip, impulsive, poor trading. You want to have a framework for understanding context. And that's what, go to www.apterostrading.com and check out our NADRO framework for seeing market context, right? I'm running a mentoring group right now, and we have scalpers in it. We have intraday position traders in it, and we have options strategy swing trader in it, all of which are using the NADRO framework to have a directional bias, to have a view on the market when and where we can have a view. The job is not to force clarity every single day. The job is to recognize when and where we have clarity so that there's something to do. So, quite the rant here. But it's just really important. IHT FP 004. This exact question came up yesterday. So since I'm not stalking a trade, let's kind of dig in here. I think this is something that could be very helpful to a lot of people on the call here. Position sizing. Today's a teaching session. Most of my sessions, I'm like locked in and just scalping, and people are talking about how I'm making them nervous. Today's a teaching session. Position sizing is super, super important. Before we get there, you have to understand my belief and framework and whatnot on kind of the whole kit and caboodle, which is you need to understand kind of your risk of ruin. That's not rate of return. That's risk of ruin today. And from there, you need to kind of come up with a daily loss limit. No successful trader can operate without a daily loss limit. Don't listen to anyone who says otherwise. And, there's a really popular person out there that trades. I forget if I follow them or X just feeds me their content. Really, really big account. And they, have recently put up a long streak of winning trades. A lot of them, if I recall, are, well, I'm not even going to say the numbers because I really don't want to single out this person or whatnot. Doesn't matter. Let's just say a lot of their single days winners, they've had a really good winning streak, are 1 unit, average winning day. And that's going to be a unit of 1 because a lot of the numbers are fairly the same. Some of them, let's say, are units of 1 and some of the winning days are units of 2. The losing day they recently had and shared was like a unit of 12. This is not sustainable. I don't care. The person obviously has some trading skill to be able to do what they've done. You cannot. I used to be that way, guys. My P&L curve would look great, gone. So I'm not judging like I'm better than that person or anything like that. I'm trying to help as usual. This person, I can assure you, does not want any help from me or anyone else. That's not their game. They're a bit more into the promo codes, if you know what I mean. But they're obviously putting money at risk and trading. So it's just a shame to see it, and it's a bad example. And the thing that gripes me about it is that they're not seeing how bad it is for the trading, and therefore there's this crew that's just like, hey, we support you, you're fine, everybody has a bad day, blah blah blah. No, if you're going to trade and you're going to survive as a trader, which what better goal is there? If you don't survive, it doesn't exist, right? So you have to survive, like Pax talks about. Here's the buyers again on NQ, just to talk a little bit about what we're seeing. So continued buyers dominate, sellers weak, buyers dominate, sellers weak. So let's see if the pattern continues or we get something of a contextual order flow shift, right? If we see some big selling start to come in, we'll keep an eye on it. Cautiously bullish at this point. If we can go with the trend and go with the order flow, look for a little something, but not an area of interest, as we know. It's not okay to behave in that manner, right? You really, I'm not talking 12R. Yeah, I'm talking 12 DLLs. I'm talking 12 average winning days, that type of thing. It's really large. It's not sustainable. You just can't operate that way and have a good career. And so I hate to see it when, someone doesn't take full personal responsibility for that and set an example to the trading community about just how bad that is. And I just want you guys to know that here. Okay, so back to position sizing, which we're going to get into. So DLL matters. Having one really matters. From DLL, I'm of the opinion that you want to get what's called an R value, which is how much do you want to risk per trade, which should kind of be backed into a little bit by what's the number of attempts that you need to be able to take each day, right? If you're a scalper, you might need 5 or 10 trades a day and the ability to lose on them, right? To do what you need to do. 10 would be a large number for most people. But, 5 would be very, very common. For a more, I only trade the 4-hour chart, and I'm a lot slower moving and I don't take that many trades per day. You might only need 2 R per day. So you can take whatever DLL you arrived at, divide it by 2. That's how much you need to risk per trade, your R value, right? A lot of traders, I think a sweet spot, just to give some generic advice, 3 to 5, I think, is a good place to give yourself 3 attempts to 5 attempts per day before you stop for the day. Is good. So that's the background before we get into position sizing, right? There's a we want a position size based around this R value that we arrive at based on our situation with risk, whether you're trading prop and you have a max drawdown, whether you're trading your account and you want to risk a certain percent of it and max that out per day or things like that. Everyone has these constraints, whether you're at Citadel or whether you're trading for Apteros or whether you're trading your own account. We all have these constraints. So start with the constraint, figure out risk of ruin and comfortability, all that good stuff. So we now have an R value. And I'm just going to use some made up numbers here. We're going to just try to keep things simple. I'm not even going to do the real math. But I am going to answer the question that was originally asked, and I'm going to give you some real practical tips on how to do this on the fly, which is really important because we can't be sitting around with a bunch of mathematical formulas trying to figure it out on the fly. There are some automated tools. Even people in the Apteros community have developed for some platforms to automatically size your trades. I'm pretty sure there's some stuff on NinjaTrader that can do that as well. It's third-party stuff, so do your own research on that. But let's talk about the reality behind it for me. So position sizing. If I'm taking a trade where I get long, let me try to find one right here. I get long at the close of this bar. And let's say that my stop needs to be here because I place my stop according to a process that's very, very important, rather than just say, oh, I always risk 30 points in NQ. No. The stop should go somewhere where the market tells you the trade is wrong. And so if you're saying, hey, this is where momentum is turning and I'm bullish, then you're wrong if the momentum doesn't turn from there and maintain from there. So it's a classic way to kind of set a stop. So let's just call this distance, it doesn't really matter, but let's just call it X. Well, we need to figure out for, how many contracts do we need to trade to target our R value for that trade? And so maybe for a trade like this, you could trade 2 contracts, right? So if your R value was $100, right? And the distance here was 10 points, and it was $5 a point, right? 10 points times $5 a point, right? So it's our $100 R value divided by 50. That equals 2, right? Your R value divided by the distance to the stop in either ticks or points times the ticks or point dollar value for whatever market you're trading. $12.50 a tick in the S&P, $50 a point in the S&P, $5 a tick in NQ, $20 a point in NQ, whatever. That's the math, So if we had a tighter stop, let's say we got in right here and had a real tight stop, right? Let's just say it's half the distance, okay? So it's 5 points times $5 a point in this theoretical example. That's 25. 100 divided by 25 equals 4. So we're going to trade a 4 lot here for this trade, and we're going to trade a 2 lot here for this trade. And we're both are going to risk $100 a trade. So that's consistency. That's keeping risk consistent. Now, it's really not that hard to do this math on the fly once you kind of get used to it. But the things that you would practically have to do is to say, well, okay, what is this price? What is this price that I'm kind of looking to get in at right now? And what's the difference? So it's a little bit of math on the fly. So one thing I like to do is set up a grid system. You see how this chart, I'm not sure if you can see it on the stream, but there are horizontal grid lines. I could go in and customize those grid lines to where, for example, they represent $100 per lot, right? So that's what 50 points in NQ is $100. 5 points in NQ is $100. And so you could have that drawn, and you know that you could set it to whatever kind of makes sense for you. And the other thing to do, and I have this on my desk here because I was showing it this again. I was having this conversation yesterday with some people. This is something I worked up for a little course that I was doing, where I was trading live and I gave myself $1,000 daily loss limit and a $250 R value. So I gave myself 4 attempts per day. And I was focused on NQ. And I'm not sure if you guys can see this, but this is what I did. I wrote down different stop distances in NQ points. And I went ahead and did all the math, right? Okay, if my R value is this and the stop distance was this and the value is this, here's the size I'll trade. And so you can then quickly say, oh, look, 25 points. So I'm trading a 5 lot. Oh, this is a tighter stop. It's 10 points. I'm trading a 12 lot, right? So you can give yourself a little cheat sheet and do it that way. So there's 2 ways. One is kind of on the computer, a little grid system to where you know the value of each grid per contract or whatever you want to set it to. And the other is a little cheat sheet on your desk. So that's how you can, boom, really, really quickly identify how do I need to size this trade to put this on right now, so that I can maintain consistency of risk. Hope you guys enjoyed that little teaching segment. Give a like if you appreciate the stream and the teaching and all the things that go on here on NinjaTrader Live. Yeah, the grid lines are really cool. I mean, when the market, unless you were in here or you had a reason to buy here, which I personally didn't. Again, I didn't like the fact that we were delta neutral from below. Once we left that point in NASDAQ, and there's no interaction with the 1 standard deviation or anything like that, and we are just drifting, not really drifting, but in this mode that the market can get into, which we kind of identify for NADRO is a fast trend. So it's really, kind of maybe even holding this 1.5, but it's not really even doing that, right? We held it here, but it's just grinding at this kind of faster paced away from VWAP move. It's just not tradable, right? If you're sticking your neck out here getting longs, I can assure you that at some point today, I'd be willing to bet a large sum of money that there will be some form of a pullback to 1 standard deviation or to VWAP or whatever, right? That's the most likely, most normal type of market movement. It would be pretty insane if we moved all day without that happening. So if you're chasing long, you are literally chasing, in my opinion. If you're picking shorts, well, then you're fading a strong environment, as we've talked about coming into the session and during this session. Buyers are strong, sellers are weak. Buyers are strong, sellers are weak. Buyers are strong. And we're running at these high standard deviations. Yes, a pullback is likely, but we need to see something pretty special to time that up and to, this is the environment where I like to say differently than some of the other folks around here that I like picking tops and picking bottoms. I don't like picking tops and bottoms when it looks like this. There's a time and a place for picking a top or a bottom. And when the market is just fast trend grinding in one direction, up or down, we have no business trying to just stick our necks out there and be a hero. bigger Axis font for you guys. VWAP from the exchange reset, okay, and then 1 and 2 standard deviations from it. Let's look at another market. Let's look at crude. Back towards the highs. Let's look at gold. Samir, I barely know what the term Mag 7 means. So no, I don't, I literally could not. What's the mag? What would that be? Is that like the old, it's like the old Fang, right? But I could probably still only name to you, Fang, I guess now we have probably what, NVIDIA in that, stuff like that. I know what it is. I'm displaying that to you here. It's just like I could not name the Mag 7. Yeah, definitely omid. It's when it gets into that mode, it's just best to go into kind of a no touch mode and wait for something. I've learned that the hard way. I've tried to, pick tops in an environment like that and lost a lot of money doing it. I've tried to chase moves like that and lost a lot of money doing it. So I've learned the hard way, like most lessons I've stubbornly learned in my life. Kind of stalking a gold long. I don't want to initiate here because it's a bit away from, it's, you know, rotating away. If you look at kind of the rhythm of this market, right? This is late. We've already moved higher. So if I can find something, preferably something that gives, you know, almost like a an inverted head and shoulders. So if you look at this level and we get something in here and then some kind of weaker pullback into this region or just above this area, then that could be something we could look for. I would love to see something of like a contextual order flow shift, which we're kind of seeing some potential early signs of. I may have drawn that trend line a little too steep. I'm not a big fan of diagonal trend lines. I don't care about the perfection of trying to see that. I just want to see really strong buying that clearly changes the nature of things. But cumulative delta in gold is very, very fickle. It very often doesn't make sense like it does in S&P, NASDAQ, and even crude oil most days. Rhythm is just the ebb and the flow, the zig and the zag, the up and the down. We're seeing quite a bit of selling in the NASDAQ. We could take a look at that. It's nothing of interest for me. In Q March 25, why is that there? Let's zoom. Oh, I was like, why is this so zoomed in? It's the 300 volume we were looking at. I was like, what is going on there? My axis messed up. There we go. See, you should know your time frames and what they kind of should look like. I know it's kind of funny to say that. And then when they don't look like that, something's wrong. Like when we first looked at gold this morning, I didn't like the way it looked. When I just flipped the NASDAQ, I was like, something's wrong. And it was a different universe, right? A very low time frame compared to what I was looking at. So as I said, there's some decent selling that came in from this high, right? Is there something super significant about that? I can't talk today. I'm sorry. No, there's not, but it's the most selling we've seen since 4 in the morning, right? We didn't really see any of that here. We didn't really see any of that here. This was a bit more substantial. So, you know, it did wick that +2, right? We'd done so right here, and we didn't get to it on those, and then we did it here. So, you know, for some scalpers, like some folks on my desk, if we were to get like a really weak up move here that does not threaten this high, which we are now actually doing, and you get that more selling coming in and taking out like a little flag pattern, that's an aggressive mean reversion type play that some traders kind of look at. It's very advanced. You need to kind of specialize in that world to do that. Let's go back to gold, which is something I'm more interested in. Yeah, I track yearly, quarterly, monthly, and weekly prior value areas. Here's a trade that a lot of beginning, even NADRO traders look to take, and it's not a good one. They see, oh, look, a down move, and then the buyers coming in, even, you know, Delta pushing higher right there, and they buy it. It's out of rhythm. This is a move that started from right here, and it's moved up. This is not enough of what we call a counter rotation. A rotation a leg of price movement that is opposite direction that you're looking to trade. And there you go. You would have been stopped out if you'd taken that rookie mistake there. Now, if all of a sudden we start to build some time, what is build time? What does that mean, Merritt? Well, instead of just needing like a rotation down, well, maybe it's sideways. Maybe we start to put in some type of like flag here and we actually do something like this for a sustained period of time. Well, then we essentially have enough of a counter rotation if that were to form. Surely we're not going to go this whole stream without me putting risk on. Surely not. Market got a little hairy into this up move here, kind of a little violent little spike up into, again, that beyond the +2 territory again. And then look at that yet again. Where's the sellers? Not there. What's the front month for lean hogs, guys? Where is it trading? What's the front month? June? Wait, no, lean hogs is Ellie, right? That's live cattle. No, it is HE. I had it right the first time, right? Yeah. Let's see what the hogs are doing. Let's check them out. Things could get weird. I'm going to go time-based. Little 3-minute chart. Is this thing trading? Not a lot of opportunity in this market on a short-term basis. Sorry, guys. If there was anything there, we'd have some fun with the hoggies, but not today. Okay, gold pushing up. So we'll be patient and see if we can get some kind of a pullback. I do not know the answer to that, Shreddy. I'm sure we could look it up. Well, let's zoom out on GC and take a look at some stuff. Let's do like an hourly chart. Load more data. Wait. So as you can see this little swing low, and then we probe through it, kind of retest it, but then fail. And then there's the retest where you see how that lines up with exactly where these lows are, right? So it's the edge of volume. We could show you that. Right. Value area low. Right there. A little bit of a low volume edge right here, just above that, which I tend to kind of prefer because, if you really look at this volume profile, it's really more than one distribution. It's really two, right? So we have an edge with the distribution into kind of this main low volume spot, and then we have another distribution which really cuts off right there, which is kind of that level that I was looking at. You could say it cuts off right here as well if you want to include a little bit more of it. It's a discretionary thing, but somewhere either here or here, which is close to the value area, is the lower edge of this distribution. And then you have the upper edge of the lower distribution, which is the same thing as the lower edge of the upper distribution. And then you have the upper edge right here. So those will be the levels that you would have, right? Which you see, right? The market responding to. After this was the important point. And why do you get this huge candle? Why is that? Well, that's because during this phase, this market was trying to, it had already broken out, right? We broke out from this balance, which is, again, why you see the huge candles, This was a retest to say, hey, we're retesting the upper edge of this balance. Can we maintain it? And this is why it's a huge candle. It's a failure. It's a lot of people stopping out. Then you run some stops to the lower edge and then kind of stabilize and retest. And that's kind of still where we're at, right? There could have been some strength from buyers if they would have held this LVN between the two nodes. That didn't happen. So again, I didn't come in today saying that gold was in just the best contextual place ever. I'm a little bit more kind of focused on short term, looking at the lower kind of edge of this area here. So anyways, there's some high level volume profile analysis for you. All right, let's watch this pullback. Yeah, someone asking me about maybe long on a pullback on NQ. I mean, sure, you can certainly do that. Oops. Wish I could remove that. I bet I can. Maybe here. Nope. Whatever. You certainly can, but as I mentioned, you need to know the environments. This is a theme on NinjaTrader Live, and I think that comes directly from the culture set at the top by Anthony Crudele. Every day he's trying to help you guys understand what's the environment, right? That's really something he tries to pull out of all of his guests every single day, is to help you guys see and take a look inside what other people see, because there's going to be differences in opinions, of course. It's what makes a market, as we like to say. But he's always trying to help you guys in that way, helping you get other people's opinions on what's the environment and his opinion on the environment. So for me, short term, I do not very often trade when the market, again, this is kind of a picture perfect trade for me. But then from there, since we've been on this stream pretty much since the open, it's done this way up here, right? It's a fast trend. And as I talked about earlier, I feel like if I'm getting long, I'm chasing. I feel like if I'm getting short, it's not an environment where I have a reason to do so or edge doing so. Not enough of a pullback here for me to pull the trigger long on gold. What kept me away from the hogs? I had no intention of ever, I've never traded the hoggies. I was pulling it up. Is there really a huge move in hogs right now? Let's go see. Let's go see. Are you trolling me? Huge move in hogs. Look at that. Woo. Let's look at a 1 minute. I wish so bad we would have bought lean hogs and just had a huge windfall. That would have been hilarious. You really want to know what was on my mind was if this little area was a little bit higher. if where we were kind of wicking, I love that we were wicking these lows. You guys know I love that. And that's my edge comes from the edges. So we're retesting that edge. But what I saw was essentially the upper edge of the volume profile, right, was a little higher. And so us being underneath those highs right here did not line up for me. If these two lows would have been up here and this low would have been down at this level here or just below it wicking from above, I probably would have put some long risk on, but that was my thought process for those who want to know. That's funny that it moved like that after we looked at it though. NQ6 pin. A little bit of a pullback and some selling here in NQ. Not enough of a pullback still in gold. U.S. talk about Iranians smuggling oil to China, continue to impose maximum pressure on Iran. So we see the tape, big boost. I feel like I'm going to go maybe time-based here for a minute. So as you can see on the 3-minute chart, a bit of volatility. Thought about shorting that. What was I looking at? I was looking at the capitulation into the news. I was looking at how that started to reverse sharply with a lot of sellers. And then short term, I was looking at the way that we were just kind of pushing into this low. And I thought about taking a little kind of breakout style trade there. I don't know if you heard my fingers start to touch the keyboard and stuff, but just passed on it. Whenever I go into stock mode, you will not see the mouse moving around that because my hands go to the keyboard. Well, gold, not sure. will get access to the long there. Tracy letting us know that headline I was reading from Financial Juice or whatever was old news, and Walter Bloomberg, that's who I was looking at. Yeah, Con, as you guys know, I'm not afraid to trade actively. That's kind of been my style the past few months. No trades today. What's going on? Let's give us something. I'd love to trade, but I'm old enough and have had enough endured enough pain to know that I'm not going to be forcing trades. I think a lot of people will sit around and talk to people on a stream that they're not going to force trades and stuff, but they really don't. I don't know. They're really afraid to trade on the stream. I'm not afraid to trade, as you guys know. We'll put some trades on. Keep in mind, this is a delta neutral. It's 0 delta for crude here. I could see myself going for a little bit of long risk in crude, maybe on a little stop run through this area. Definitely something I could take a look at. Do want to check on gold real quick. I'm assuming it's not pulled back. That's correct. We're up into VWAP now in gold, so Jose, I appreciate the question. I'm not trying to avoid it or anything like that, I promise. But I don't have numbers for you on things like that, right? You would think a snake oil salesman would say something similar. But NADRO's not a buy here, sell here method. It's a collection of frameworks. I don't trade it on the daily time frame myself, so we'd have to go find one person who did it, and we would have to take a look at how they structured their trade management, their risk, how they place stops, whether they lean more heavily on some of the more structural profiling tools, or whether they lean more heavily on some of the more VWAP based tools. And so it's not a one size fits all thing. So I can't give you stats on it like that. I can say that for generic NADRO trading, with pretty tight stops. A lot of traders are running win percents in the mid 40s. I'm going to test an order. Fortunately, it looks like we've got some confirmations on. Matt, if I used bonds in any way, it would be as a standalone market to analyze using NADRO frameworks to assess the risk reward landscape and opportunity and all those kind of things. No part of NADRO uses one market to influence a view in another market. That's not what we're about. These highs, just in general, are looking quite vulnerable in Q. That's the first time we've seen that today. So one trade I'll occasionally take is positioning for stop runs. So we'll keep an eye on this. See what happens as we test this low right here. We've got a trade on. We did it. I almost always mark it in, and I almost always mark it out as well. Okay, so stopped here. We could keep an eye on this. For potential re-entry. We're going to hop back in. Today, with me not using an ATM, you'll see more of like my true risk reward on trades and whatnot, right? So this is 1, 2, kind of 3, 3.5, 4R at this point. So risk reward's a big deal. I do want to take some off if we take out these highs, and I want it to be a 1 lot. Yeah, it appears like NASDAQ is not done. You know, perhaps we're getting more of the pullback to that kind of 1 standard deviation level. So I assume we're going to get taken out on this one as well. I'm going to zoom out a little bit back to more standard time frame. I'll go to 1,000 volume just to kind of get that picture that I'm used to trading and seeing. Really liked this, how we kind of just wicked this area. Beautiful re-entry on the second. So the sellers are not too strong here on this retrace. So there's a small chance this could still work out, but who knows? I'm not emotionally living and dying by the outcome of one trade. I love it. We got multiple people in the chat fading me. I absolutely love to see that. There's nothing worse as someone who's sharing their position when all of a sudden everybody's saying, "Yeah, me too, me too, me too." It's not you never want to see everybody all grouped, into the same thing. That's probably not good for any of us. So let's make a market. Okay, I had canceled my limit order because I had assumed I was about to be stopped. Let's throw it back in here. Okay, so we got a little scale there. So that one third scale paid for the original stop of the first entry. Why am I telling you that? Who's been following me long enough to know why am I telling you that? Let's have a conversation. I know there's a delay before my voice gets to you, but nobody knows. Spectrum of opportunity? No, that's a good NADRO term, but that's not. Mark says to smooth your equity curve, you know, with scales as opposed to kind of the. He's not wrong, which would be a bigger swinging equity curve if you were purely all in, all out. Oh, thank you guys. I'm used to an ATM strategy that adjusts my stop for me. I appreciate y'all. Let's just do it this way. Oh yeah, so back to the question. God says, what was your question? What was my question? I pointed out, and it was not to toot my own horn or talk about P&L or whatever. I pointed out that I took off a third of my position, and I glanced over at my P&L on the other monitor, and I'm down $15. Okay, so I'm flat for the session in terms of realized P&L. On a 1/3 scale out of the reentry, right? I took a trade, I stopped, I reentered, and I've scaled 1/3, and I'm flat on the day. Let me read some of the answers. Thank you so much, Nick. I really do appreciate that. So Savas says asymmetrical risk reward. No need for big win percent. And I'm going to take another one off here, I believe. We took out the high of day. See a little bit of selling coming in. You see that delta red. Yep. So I took off another, and I canceled a stop. So we're long one with one stop at the edge of these lows. If we come back towards these lows, we're going to run stops below them. So why is my stop not sitting below there? Did I do a move to break even? No, I didn't. Back to the topic, Merritt. Stay focused. The point was that I could take off a 33% scale that I'm holding for really good risk reward, that I'm placing stops and managing risk and displaying the skill of short-term timing, which, by the way, the whole point of is so that you can size your trades up and improve your risk reward. So get great risk reward, take paper cuts, small losses, and then when you hold trades that work for, again, what's my R multiple on this trade from where the original stop was, right? Let's just ballpark it. It's probably like 6 or something up here, right? 6R. That's a big trade for a lot of traders who frequently are trying to get their numbers above 1-to-1, So I'm just trying to convey to you guys at home how awesome asymmetric risk reward, structuring your trading, no matter if it's a scalp like this, or if it's even bigger risk reward contextually when you've got some really good setups, which is not what this is. Small losses, big wins. It's the very first things you guys read in the very first trading book you pick up. And somehow it gets lost on a lot of people, and they start to focus on being right. They start to focus on win percent and all that kind of stuff. So it's a big deal. And so I wanted to make a big deal of it to you here today. Probably not going to overstay my welcome in this trade, right? If we were to take a look at what volume is doing real quick in this area, you would start something around here. Zoom into it. So for me, I want us to just continue to hold the edge of this upper distribution. So I give it a little wiggle room, something like this. We could kind of retest into the upper edge here if it's going to do so. It's still in threat of being wicked, but it's a decent spot for kind of a trail, if you will.
All right. I was sorry. I was talking to myself for a second. Merritt.
Oh, hey, Jim. I do that all the time. It's no
What's
big
up,
deal.
Merritt?
Yo, Stowe, how's it going?
Good, bud.
Man, that's masterful stop management is what we just witnessed. That's my number one takeaway on how good your stop management was. And it's just so important, man.
Risk is everything, man.
Yes, sir.
Yeah. And also I know this is going to sound kind of corny, but it takes bravery to get right back into a position you just got stopped out of because something you saw changed, right? And boom, you got right back in, and that was successful. That's hard to do psychologically sometimes.
It is. It really, really is. And it's something I have to hammer new traders on my desk and new students about is I tell them straight up, for my style of trading, this is not true for everybody. This is not a blanket piece of advice, but for my style of trading, I would not be successful without reentries. Period. Now I have to. I'm placing stops that are tight, and I think Stowe, from what I've seen from him, he trades in a similar way a lot of times. Where, look, just because you get stopped out, and we have to have risk management and daily loss limits and maybe max attempts per idea, right? Things like that are really good, prudent things to do. But just because the market has a little blip and stops you out, it doesn't necessarily mean that it's very impactful. And one thing that Stowe and I both do is we look at the order flow. So we can see when a market is stopping us out, is it really scary? Does it mean business? We're not going to have reentries, preferably. Or is it just a mean little stop run like markets love to do, which we're going to get caught up in from time to time. And we can identify that through experience and using really good order flow tools. Boom, the reentry's right there. So it's something you get used to, and it's kind of a way of operating it's cool for short-term traders.
Yep.
Yeah,
absolutely, man.
You went with the trend. All the boxes were checked, man. It was good. Very, very awesome.
Yeah, it's
So
NQ also, so it's going to stop
Yeah.
you out.
Whippy. Yep. Whippy, whippy, whippy.
Yep.
Whippy.
oh my goodness. Anyway, so just kind of wrapping up, what's your strategy here to manage the rest of this trade? Let it ride?
I don't want to overstay my welcome on this. I really don't. As I started off the stream, I think we're getting into some areas where we could run out of gas a little bit and see something of a pullback. So to me, it's not like, I mean, obviously this is you can't have a better short-term trade location than this, but bigger picture, I'm uncomfortable just walking away and holding a core here. So to me, it needs to hold the edge of this volume distribution first and foremost. And if I get some kind of really overheated extension like we've seen at times today, if I zoom out a little bit into kind of the +2 area, if I see something like this, if I see something like this, or this with kind of the capitulatory order flow, I'll come out of it and upon strength rather than waiting for it to come get me.
Yeah, I mean, that's another great risk management strategy. I mean, it's, I don't know how many times I've moved my stop to break even and, oh, look at me, look at me. And then all of a sudden it's like, oh no, I'm going to get stopped out at break even.
Yep.
Well, the magical thing is you can always get back in, If you see something that makes you want to get out, just get out. And if you see something that makes you want to get back in, just get back in. It's
Goes
okay.
back to that conversation of the reentry. But I often get asked, like, are you going to write a trading book or things like that? If I write one, I'm pretty sure the title is going to be The Art of the Reentry. That's going to be the title, just so you know.
That's
I
pretty
love
good.
that. I'm buying that book. Let me know when it goes on Amazon. That's awesome. Con, thanks for those. You got that. Con nailed it, man. He's like Merritt and Stowe, the dream team, right here live.
Dream team.
Thanks, God.
What an
Yeah,
honor.
we got to get that Stowe Merritt stream going. We got to work on
Yeah,
that.
we're going to, for sure.
Absolutely. So, in any event, Merritt, I know it was a long morning for you. I appreciate you being here with us at NinjaTrader Live. It was great. And looking forward to seeing you again very soon.
Likewise, Jim.
Later, man. I'll try to carry the baton. We'll see if we can keep this trend going.
Let's go.
Okay.
Let's get into
Yeah,
it.
baby. We have
See y'all.
Stowe see you, Merritt. We have Stowe in the house right now.
What's up,
Order
Jim?
flow labs. Well, I'll tell you, about 2 minutes ago, and I don't know if I handled this correctly or not, but
Okay.
my wife sent me a text and said, "Hey, I'm back from the grocery store. I need help bringing the groceries in."
Okay.
So I texted her back. I said, "Back off. I'm streaming."
That's a choice. That's a choice response for sure. Not something I would ever say, but that's an option.
Oh man, I want to go downstairs and face the music.
That's funny. Yeah, we can. We'll switch over to my screen so you can get out of the doghouse before you got to come back at noon.
Oh my goodness. Anyway, well, tell us what you got. What do you have cooking here? What I'm interested in knowing.
Yeah, so I'm just doing the same. Today's the kind of day that like I feel like the market is finally decided to be nice to me for a second. This is my A++ day. I'll probably ride this day the whole time into the afternoon stream as long as this trend continues. So I'm on days like today, you can just get in. And I saw I was looking for a pullback this entire time, didn't really get one, and saw some insane order flow right here. And I just said, all right, let's go. Let's start to build a position. If we're going to trend, we can buy high and sell higher. So, just started to build it, bought, scaled, added, scaled. Went to get a coffee here and got stopped out. That was annoying. But other than that, it's been just building around this core here, giving it some room for this IB break. And now we have this big seller up here, a big passive seller at 260. I think Con pointed out there's like 600 lots on the offer. So like what Merritt said, we'll see what happens. These trends tend to, fade off while Europe closes, and then we'll look at good pullback entries down here around VWAP, other areas that we haven't retested at all because it's been such an incredible trend. But that's my plan. Just gonna ride it till it's over.
All right, all right. Well, I'll be here. I'm not going downstairs. I'll be,
Okay.
I'll, I'll be watching, taking notes, man. And thanks for being with us, and good luck.
All right. Thanks, Jim.
All right, man.
Morning, chat. Good morning. Good morning. Good morning, Omni. Yes, I am always long. Not always, but I mean, if I'm in a good trade, it's typically a long one. How's everybody doing today? Everybody feeling good about this trend? Yep, we've got single prints. That's a good thing. B period singles confirmed. So this blue block here, those are those singles. That's a good sign that, you know, we're going to try to stay on with this trend. Hey, Tracy, good morning. How was that? How'd that news shake out at 8:30? I saw the candle, but I don't know what it inferred. Do you got any news stuff for me, Tracy? Well, I go back and look at our overnight, see where we're at. Well, rats, it didn't print my candle again. Sometimes it prints the zone for me, and sometimes it doesn't at all. I don't know why. But all right, so here we are at 3 a.m. So this is our European Open right here. Actually, it might be this tiny, tiny line. Maybe it was just so small. Yeah, maybe it's this. So here's our European Open. And as we can see, we're insanely long out of it. This kind of price action is really funny. This kind of price action is ridiculous. And whenever you see it, I encourage you to not short it, because this is, I don't know, about a computer program, an algo doing some sort of buy program, just like stair step up. And then we had this news candle here. Yep. Okay. So Tracy's going to tell me about that. The CPI came in as expected, slightly cooler. Cool. And they trimmed the Fed bets. Okay. Sounds good. So yeah, this is our CPI candle. No reason to note this other than I like to note the extremes and watch what happens at those retests during RTH. So here's a low that didn't get tested, and then that's the high of that candle. And these are 750 vol candles. And then yeah, here's the trend day. Small push down to try to fill the gap, and you know, rejected. And it was just a super bid ever since. We got to this CPI candle high here, and we did have a decent reaction. You can see all this passive selling came in right at that high, just back here. So I was watching this. You know, I'm just kind of observing. I took some of these trades, but not in this account. This is just our dedicated NinjaTrader time account. Since we're doing our stats and stuff, I want to keep it clean and just for the streams, just so you guys see all of my trades. And if I ever take a trade on this account outside of the streaming time, I'll put it on Twitter and make sure that it's explained on there too. So yeah, we saw this. Just check on our long here. Okay, we're still good. We're still 31 points. So saw this passive seller. It just kind of ground around up here. And this bid delta came in and was supportive. We couldn't even get back to VWAP. It was so intense. And then it popped and was gone. Once this passive seller was consumed, then that's when the giga trend started. And this is like super trend. Whenever I see the VWAP bands pointing up and to the right at the 45-degree angle, price refuses to leave it. That is, you know, zero fade for me ever. Never going to fade this. And then, yeah, we got in up here. As I got ready for the stream, I was really waiting for a pullback, but Would I like to see a pullback to this high? I still would, but I don't know if it's happening. Sometimes the trend just goes. You don't get the pullback. So I just got in and started, taking profit, trying to build a position I can hold throughout the trend. So yeah, that's what we're doing. And now we're running into, we haven't got that 260 guy yet. So that's good to note. We're going to go chomp them up here. If you watch over here on the delta, when he gets filled, we'll be able to see it populate immediately. The interesting thing about this is there's a lot of absorption in front of that order. I mean, this is a lot. This is a lot of passive selling up here, which is fine. We want to see that because passive selling that is not rewarded will fuel this trend higher. Tracy says, we had some news out later that U.S. to boost Saudi AI chip access. Okay. Trump's in Saudi Arabia now. Nice. Cool. Fat fish, what's my compression setting? You know what? I don't know. Let me show you. We'll look together. Actually, hold on one second. I want to watch this 60 guy. And then once this reaction is seen, I will show you. Okay, we're right up to him. He pulled. Ha! Fake. Oh, man. Love it. Love to see it. So, yeah, only 40 lots got filled there at 260. So that order did not exist. It existed, but it did not intend to be filled. Spoof and run, baby. That's funny. I love it. Good morning, Nil. Good morning. Good morning. Yeah, Con, that's my favorite. That's my favorite when that stuff gets pulled. Oh, he's up to 285? Okay. Oh, yeah. Wait. Yep. So, yeah, we're going to keep chilling on this. But yeah, I will show you my tick compression. I think I want to say it's 9. It's a little bigger than I normally run just because I want you to be able to see it on the stream. I like to keep my tick compression like low. I like to see what's actually going on when I'm trading by myself. What do I need here? Volume profile. This one. Yep. Tick compression is 9. Fat fish. What is ES doing? Oh, it's just chilling up there now, huh? Yeah. Yeah, that's going to be slow. I mean, NQ's going to get slow too. If this is a true grindy trend time, we're going to have to put on our patient hats. Dan Emmons, what's up, buddy? I don't know. I don't know if it's going to sell off. The thing that I look at, I don't know what it's going to do, of course. But the thing that I will look at is if we lose this standard deviation, the +1 on the RTH VWAP, and we start to push down, then I can see it getting back into value. But just a personal rule that I have is I don't short anything if it's in if the band is still pointed upwards like this. You can see it's smoothing out. So the trend could be ending. Like here is extreme, and then you can see it start to flatten. And I'll probably get rid of my runner down here if we exit that. It's not something I'll look to short. I will still look to, let's see, what time is it? 11:15. So Europe's still closing for the next 15 minutes. It's not something I'll look to short. It's a short setup that exists. I just don't. I'm not interested in trying to fade a day like this. But then I'll look at reentry at this high, view up, stuff like that. But yeah, we're inside of the upper band. These single prints are confirmed. Yeah, it's just not an environment that I fade. I also am not great at selling, so that's another thing. Stowe, are we going to NQ 21,345? Dude, if I knew what price we were going to trade today, how sick would that be? That's like knowing the lottery numbers. I have no idea. We could. I mean, we could do anything. I mean, we're one tweet away from this going all the way back to the open. So you never know what's going to happen. Just gotta trade what's in front of you. I'd say it's possible. I don't know what's up there. What's at 345? Matt D says passive selling that is not rewarded assumes they are initiating positions instead of exiting them. No, I'm not assuming that. Not at all. I'm just saying that by saying not rewarded, I'm saying that, the buyers are still excited to buy higher beyond that passive selling. So buyers bought all that passive selling and then said, I'd like some more. And then they keep going. So the selling being not rewarded is more about the buyer's aggression than it is what the seller's intention is with those orders. I don't assume anything about anybody's intentions with their orders because we have no idea what people are up to. This is like a field trip. Oh, we're at the yearly open. Oh, thanks, Neil. Yeah, I have the Order Flow Labs dynamic ATR is at 315 also. So that's where my sell is on that. I'd like to get another lot on if I can somewhere. I haven't figured out where it's going to be yet. Mine's at 8, but I find myself wanting to be more granular. Okay. Danny asks what indicators you use for buyers and sellers. I'm not sure what you mean. I'm just looking at Delta. And then I also have a depth of market on another screen that is flashing around too. Hey, good morning, XY. 26K by the afternoon. You think we can get there? I don't know. I think it's kind of a curse to try to hold my position from my morning stream into my afternoon stream. Every time I've done it, it hasn't worked. So I'll probably get flat and then try to play the game that's in front of us when we get to 2:30. Whoa, baby. There's a couple buyers partying. Yeah, that's some pretty spicy buying. Bunch got filled at. Yeah, I see that 604 guy at 286 again. And then this is a bunch of absorption here at 280s. Yeah. Another way to use these tools too, like these bubbles. Yeah, another one just fired there. Um, these are exhaustion. And when you see exhaustion, like not being exhausted, that's another trend sign. A lot of these are, mean reversion indicators, and it doesn't mean just click the button when you see one. Um, you have to use the context of your other rules, the rest of the day, all the things that are going on. So, I mean, I'm not going to short this no matter what, but it's interesting that like this exhaustion barely provided the pullback to the IB. And then we'll see what this exhaustion is going to be. Because you get a big buying spike and it's going to run out of gas a little bit, but it's the follow through. The buyers step back in and support that spike, continue the grind. That's fair. No, you can definitely scalp. There's my hey AJ, what's up, buddy? Oh my word, AJ's watching the stream. Oh, my buddy AJ's hanging out. Awesome. Yeah, it's not that there aren't short setups inside of this trend up. You can scalp any way that you want to, but this is just my rules. Gotta have rules. That's the one thing. If you don't have rules for yourself, you'll get into trouble quickly. Yes, that's AJ. He runs Lucid. He runs the painting the tape thing with me, and yeah, he's one of my great friends. He also, shout out to AJ now that he's in the chat. He taught me how to do this. Probably. He's the originator of Stowe. Do you know that you can buy high and sell higher? And I practiced it for a year to recognize these trend moves and breakout strategies. It was not really something that I had in my game at all. So thanks, AJ. Now all these people are watching it. Oh, shoot, Damon. My bad. I got to uncheck that. Whenever you upload, for some reason, when you upload a podcast to YouTube, it automatically sets it as private. So I'll do, once I'm done with this stream, Damon, I'll go uncheck that and make it public. That's my bad. I'm a really terrible producer, frankly. Omni, this is called Element, and it is a really nice drink. It's got a ton of sodium, a ton of potassium, and a ton of magnesium. It's this like salty soda water. Kenny asks, Stowe, is this upward spike followed by lackluster selling volume similar to what Merritt's view of flaggy structure is? Maybe. I don't know. But yeah, when you see it's like when you don't see a seller step in after a big pop like that, that's just a sign that the buyers got really happy and ran some stops, and then it'll fade back a little bit, and then do they step back in and continue the grind is what we look for. Elaine, there are no OFL indicators on TradingView. No, there's several other platforms, but this is NinjaTrader. That's what we're looking at now. Nick asked me, is there a reason you use the deviations of RTH only and not the full session? Yes, I find that they work better because this is what I'm trading the New York session. This is the volume that I want to look at. However, that was different yesterday. I did have both up because if there's a big overnight move like we saw out of the European session and that giant gap up, I want to see that 24-hour view up too. So if there's an abnormal amount of volume in the Globex session, then I'll pull up that one too. Just reference both of them, and they're not like the deviations are just like, it's just like a guideline. They're not magic lines or anything, but they help me keep the context of the day in front of me. Let's see if we get a new high would be encouraging. There we go. Nice. New high. So yeah, we saw what happened here. Seller exhaustion. Pulled back a little bit and then was rewarded. Hey, you got filled. Great job. Great job, 604 guy. You got your fill. Good work. Maybe he was taking profit and he's like, I can get another 25 points out of this. 25 points on 604 lots. That's a pretty good day. It's a pretty good day. Yeah, right. Matt. Man. That was some fast math, Matt. So fast. Hey, Nebula, what's up, bud? The gang's all here. I got everybody chilling. Yeah, Tanya drinks those drinks too, Sav. They are incredibly addicting. Once they made, I used to like the packets. When I run and stuff, especially in the summer, I have to have them. Otherwise, I feel like garbage. But once they came out with the soda waters, yeah, the addiction became full blown. Now we've put the point of control up here. Mr. 604 Lots is really partying, really proud of himself. Good job. Good job, dude. I'm proud of you too. I don't have Bernardo. I don't have a YouTube channel. I just do this. You're on it. I'm on here quite a bit, so you can just hang out on the NinjaTrader channel, and you'll find me eventually. That would be a good soundbite. It's worked a couple times. How did NinjaTrader find me? This is all Leo's fault, frankly. Leo asked me if I wanted to stream in the afternoon, and yeah, it all went from there. I said sure. Frankly, I was terrified, but I don't. When Leo asked me to do something, I take it as a challenge, and I say, "Yep." What else you got? So, and it's usually worked out for me to my benefit because he's a smart guy and he's a great friend. But yeah, it's weird. I was thinking about this last night. I wanted to share that too. So, in a lot of the ways that you have to adapt, we talk about adapting to different trading environments, adapting to different stuff. There's also a level of adapting that you have to do to your own emotional state and your own life. Like as your life changes around you, it's going to affect the way that you trade. And I've always known that. So, and that's like, if you're having a bad day, if you're having a bad week, you have like something going on at home that, is bothering you. Could be anything, family stuff, whatever. If that's going to carry into your trading a little bit, and it's a good idea to be cognizant of that. But what I was thinking about last night is I was like, a really crazy thing I've adapted to is now that seller's trying to come in. Hold on one second. Yeah, a really crazy thing I've adapted to is trading in front of people like almost every day. And it's a whole different environment in so many different ways. And so I was thinking about that. I was like, I should really start to take into account the way that this has changed my trading and see if there's anything that I can learn about myself from that process. And like, there's a ton of stuff. And you guys know, like, I share all my fills, all my stats, you know, P&L, profit factor, everything on this account. And that that has changed the way that I trade, for sure. There's no way for it not to. So I just want to make sure that I'm still on my game, still doing the things that I need to do for my process, and that I don't let it change my environment in a negative way. So, and if you have something like that in your life, like if something changes in your life, you should watch out for yourself and make sure that, you know, you're not letting that get in the way of your process. And if you are, just take a break. It's much better to take a break and come back when, you know, your stress levels are lower, as opposed to trying to push through it and, you know, taking money away from yourself, digging yourself into a hole that you didn't need to be in, stuff like that. It's also good to never be a hero. That's true. There is no trading Hall of Fame, I don't think. If there is, none of us will be in it for sure. Maybe it's like Rambo, PTJ. I don't know. There's probably not enough people to be in there. But yeah, don't be a hero. There's no extra points for being right. Just do what comes naturally to you and is true to your process, and then that's the key to being consistent. And yeah. Oh, thanks, Nil. I appreciate you so much. All the kind words from everybody. Like, seriously, thank you. It means a lot to me. That's not smoke. I really mean that. Yeah, there is some there are some trading competitions, but I don't know if there's a Hall of Fame. Ooh, with great leverage comes great responsibility. That's nice. Is that Spider-Man or Superman? I don't remember. That's Spider-Man, right? Yeah. Arlon, I don't move my stops. I just don't do it. This trade's been paid for like 9,000 years. I'll manually get out if it comes back down. But this is where I want to be. If anything, I'm probably going to add. I just haven't found a place. I would like to see this break though. It's all right. 11:33. Europe's closed. We're still grinding. Let's see, when did that guy get filled? Yeah, like this, maybe this little push down might have been that close, and then now we're still grinding up. Oh, thanks, Rockstar. Appreciate you. Ooh, nil. A career transition and trading at the same time. Yeah, that's hard. I mean, it's basically like, what's the top 3 most stressful things? Like moving, starting a new job, divorce, all those things. Like, you need all of your mental at all times to be able to trade effectively. And if you get to a point where you don't have all of it, like you shouldn't be trading. And just, you know, just give yourself, ooh, yeah, having a baby. That's scary too. Especially if you have a kid, have a kid and then have to just support them with trading it. Life gets very real very fast. And that pressure is intense. I speak from experience on that. That was one of my hardest mental hurdles to overcome, for sure. Oh yeah, please like the stream. It helps. Oh, Merritt, yeah. Yep. Exactly, man. I mean, it's like it's like a sleep experiment when you have a kid. Like your whole universe changes. Like nothing's real anymore. Everything is new. And there's really no way to prepare yourself for it. You just got to ride through it. It all starts with that really uncomfortable chair that you have to sleep in at the hospital. I feel like that's where the transition really begins. You're just like, yep, now go sleep in this really uncomfortable chair. And we're going to put your kid in the nursery. This is your last night of sleep that you're ever going to get. Oh, thanks, Omni. I appreciate you. What's that turkey saying? Something bullish? Dan, what about this makes you feel like a top is being made up here? Just curious. Because I mean, I don't see this as, but I don't look at any high time frame stuff really. I'm just trading, usually just the day in front of me. Yeah, even if I pull up my high time frame chart, it's not very helpful right now. But we'll pull it up for fun. Yeah. Hold on, let me scroll up. There we go. There's some bid. More bid. Oh, now we have a 550 lot guy at 300. Let's see if he gets filled. Sorry, let me go back. Let me go back to the chart. Watch this 300. Now that's some seller initiation. So maybe that was the exhaustive pop we've been waiting for. Yep. Bid ate it right back up. Stepping on it a bit now. Let's see. No, Dan, I still don't see it, bud. Let's see if this 550 guy gets filled. Oh no, Matt, this is NQ. That was some selling initiation, a little bit. But now they've pulled off again. It was a fair bit of business up there in this 290s. It did not tick 300 though. How many levels of orders can you get on NinjaTrader? Only see 10 on my platform. Are you talking about like market data? Like full depth? On the DOM. Well, it depends on what your that depends on your data platform. How many, like if you have level 2 CQG, I don't think it's the full book, but Rhythmic is full book. Like there's a bunch of different ones. So that all depends on your data provider. But I think you can. I would assume. Actually, I don't know. I don't know. I don't want to speak about something that I'm not super clear on, but I'm sure that's a question that exists in it. Yeah, you would just have to find out what data platforms Ninja supports and then go from there to try to see, however much of the book that you want. Yeah, it definitely makes a big difference on the DOM. I agree. Antonio, what do I do in my free time? Yeah, hobbies that cleanse your mind. Uh, so I have a really big lawn and I like to mow it. For real. That is something that I really like to do. Um, what else do I do? I play one video game, and I actually play this game in the morning sometimes to warm up for trading. It's called MLB The Show, and it's a very much like reactionary. It's a baseball game, so you're watching pitches, and you have to control see what kind of pitches come and where. And it's very hand-eye coordination. It's a good warm-up for the market for me, I've found. So I usually play it for like 15 minutes before the market opens. Yeah, I love baseball, Fatfish. I do. My favorite team is the Pirates, and we just fired our skipper 2 days ago. So it's kind of been a bummer year so far, but they're my team. I'll manually stop out if I see, I need to see a rotation. So this is look at this. This is my this is set to reset every 60-point rotation, right? So we haven't had a 60-point rotation in, I don't know, a billion points. So I need to see like a lower low, something, any sign. There is definitely selling and there's a lot of business going on up here, but I need to see this rotate down, rotate up, and then rotate lower. And then I'll get out. And then, because then it will be done. And then I'll look for another trade. I'll look for a better entry. But for the moment, we're just, it's just pushing and building, pushing and building, pushing and building. So I don't have any reason to get out now. I'm actually going to move this up too. Yeah, I'll take 329, I guess. So this is like extended. This is a really extended day. This is all I'm really trying to get out of this day. I've already got 75 points on this runner. It's great. And, there's a part of the day where you have to like just be done and be happy with what you got. So we're also approaching that time too. Oh, nice, Fatfish. Oh man, Simon is the best game ever. Wit. Yeah, you must remember me saying that somewhere. That's how I approach the market. Does anybody remember that game, Simon? It's like a circle with 4 colors on it. That was my favorite game when I was a kid. Oh, I loved that game. And it just like it plays sounds and lights, and you have to remember the pattern. Oh, makes me happy just thinking about it. Well, Hans, I don't. Yeah, I'd like to add, but I've already got a lot of points out of this. Yeah, I've got 200. I got 200 points just in this. So this is, it's bonus. It's not like I'd like to add, but I don't have to. I've done a fair amount of work on this today. So, and even my spots to add would be like, I don't even know. See, I would like to add down here, but when I look at that, in order to get there, it would have to fall out of the +1 standard deviation. So I don't really see myself adding to this trade at all. These micro pullbacks, I guess, were the pullbacks, and that's kind of too small of a pullback for me to look for an add. Like I said, I'd like to add, but I just haven't had a chance. Because if I'm gonna add, I want it to also be in a new I also want it to be in a good location, because I treat ads like a new trade. So if I'm going to add, I'm going to need a 15-point stop loss from that ad. I don't really. Yeah, I got nothing. Kenny, Stowe, you see the placement of the VPOC in the distribution, for example, VPOC moved right up. Yeah, once that 600 dude got filled, he became the point of control. Oh, I lost your question. I'm sorry. Volume is coming up on top, and yet price is stalling. Is that absorption? Yeah, maybe. Or this is just a lot of orders to go through. I mean, the bid is coming in to support it too. So just because price stalls somewhere isn't enough of a context clue for me to do anything. Let's see if this 500. Oh, 500 guy pulled. The guy at 300 is gone. You turkey. Oh, he moved up to 310. Yep. So this guy's going to get another 10 points, he thinks. That's funny. Yeah, I'm sorry. Just because price is stalled is not enough of a signal for me to try to think or do anything. Because sometimes price just stalls because there's a lot of stuff to do right there, and you don't know if it's gonna stall and reverse or stall and continue until it does one of those two things, right? So I try to wait for the thing to happen, and then go from there. Multi-billion deals with Amazon, Oracle, all here. All right. Hey, you're welcome, Kenny. Of course, anytime. Please ask me questions. Like I said, I haven't had a chance to add to this trade. I don't really have anything to manage other than Kenny. What would make me consider a short on such a day? I probably nothing. Honestly. It would need, okay. So we would need a serious context change, meaning like sellers need to come out of nowhere, sell, and then I need this VWAP band to completely flip around, meaning in order to do that, we probably have to sell at least past VWAP, and we'd have to lose this distribution, and then I could maybe get on like a rotation up to continue down, but I mean that would need to be a pretty serious context change. Not that can't happen, but it hasn't happened yet. And I'm also not as good selling the market. So that's another thing. What I would probably do, since this is like, I'm really trading, is I probably will just be done and stop looking at the screens and go, well, it's raining now. I do like to go. I got a hammock. I'm really excited about. I didn't get it. My wife got it. And she's like, will you put this hammock together? And I was like, hammock? Why do we need a hammock? And then I sat in it and I was like, hammock. This is where it's at. I love it. Sure, Kenny. No problem, man. Stowe, pleased with the OFL indicator. Do you use to get bubble in time and sales? Are you talking about the reconstructed tape? Yeah, Dan, we could go to the lows of the day. It's possible. This is a bunch of passive selling up here that, isn't really getting anywhere. Never know. Love a hammock. I didn't know. That's why my wife is cool though. She gets stuff like that I would never have thought to get, and end up being my favorite thing. Yeah, HC. I use no, it's not always the same. HCS is my stop loss always the same distance from your entry? No, it's not. But it usually is. If we have like insane volatility and I have to size down, so like when we had all the trade war world and all that stuff was popping off, I cut my size in half, doubled my stop loss. So it's the same risk, but if you're getting larger moves and you need a larger stop loss, and then that larger move is going to pay for that risk the same way. But now that we're back, in a relatively normal volatility environment now, for now, I keep my stop at 15 points. It's just my default. I don't really have like some quantifiable reason to do it, but I do it. I love these Trump updates, Tracy. They're cracking me up. Nothing is funnier though than when Waller got on and said it would be bad for the economy if Fed officials were fired. That was my favorite. That was my favorite comment from any Fed person ever, ever, ever. I won't forget that.
Oh, I'm on the screen. Hey, Stoke,
Jim,
good job.
what's up, man?
I don't know. There's a lot of stuff going on, but
What's up with those groceries? They still down there? Are they getting hot in the sun? I hope there's not milk.
Well, no, I made amends.
Good. Smart.
Very
smart.
I immediately recognized that the garbage was full, so I threw it out real fast to help her out.
Perfect.
So I got some points there.
It's important to get marriage points just as it's important to get market points. They're almost equally as valuable.
Almost, not quite. Oh man, but no, I love I love the discussion about where you always put your stop at the same place. I mean, for me, it's like I used to get a lot of questions like, so if my profit target is 8 points and my stop loss is 4 points away from my entry, that's my system.
Right.
And to me, it's like, all right, you got support and resistance areas that are different every single second.
Yeah. You have to constantly be adapting that stuff. And it's also like, that's why I really like the brackets, to have the whole thing on so I can see my profit targets. I do have those fixed, but when you open a trade, you might have, a ton of meat on the bone, or you might have, not very much. So you have to be realistic with like, how much are you expecting to get out of this trade to begin with, and then kind of build your profit and risk off of that. So I don't know. It's a lot of like, I was getting questions like, where am I going to add? And I don't know. I didn't have a space to add because I don't know how much meat is left on this bone. I don't know. Like, would I initiate a new position up here? Probably not. So
Yeah.
that's not that's if I answered probably not to that question, that's usually a no for the ad too.
Yeah. No, that makes total sense. And your patience right now is legendary.
I've been having fun thinking about like the different things that, trading on the stream has taught me, the different things that because I think that like everything is an opportunity to improve all the time.
Yeah.
And so like any lesson that no matter where it comes from is going to be a lesson in improving. And I was really thinking about that a lot last night, and the different things that trading on the stream have given me. It's a challenge, but like I'm lucky to have that challenge because it's taught me a lot of stuff. So
Yeah, and the other thing is, the nice thing about it is, I mean, you're kind of talking to yourself also, right? So you're talking to anyone who's
Yes.
tuned in, but
no more than usual.
Right. But that voice by talking it out loud, you're kind of you think better about what you're about to do.
Yep, absolutely.
Yeah.
And I'm
Yeah.
sharing the stats too now, so it's like extra levels of accountability that normal people don't have, which so that's
Yeah.
a gift too, for sure.
Yeah. Yeah. Absolutely. But you're doing double duty today, right? You'll be back
Oh
this
yeah.
afternoon with will I see the same trade percolating?
Yeah, maybe. I don't know. Um, it's still grinding up here. It could just keep going. I'd really like to see some sort of pullback and then get an additional ad there, but I don't know.
Okay.
We'll see. But
All
me and
right. Well,
XY will be partying no matter what.
we'll find out at 2:30
Yep.
East Coast time. Everybody in the chat, don't forget, smash that like button, man, or you could tap it gently. Either way, you get a notch. Doesn't matter if
Yes.
you tap it gently or you smash it, but I prefer the smash method.
Oh, Rockstar, 15 points, not ticks.
There
Oh,
we go.
thanks, Job. Thank you, chat. I appreciate you guys.
All right, all right, all right. So I'm gonna do. Thank you so much, Stowe. Appreciate
sir.
you as usual. See you this afternoon. I'm gonna do a quick edge report, and we're gonna wrap it up for the morning.
All right, brother. Thank you, Jim. Bye, guys.
All right, let's start with gold right now. So gold actually is some interesting price behavior right now. This is a daily chart, daily candle, real quickly here. We have an inside bar cooking by every measure possible, by the wick, top of the wick, the bottom of the wick, the body of the candle, everything else, inside bar in gold right now. But we're uncomfortably close to the midpoint of yesterday's candle as well. So for the bulls, it's positive. For the bears, it might not be that positive. Right at that 50%. This double bottom right here held. I know it's more of a long-term point of view, but this double bottom so far is held. Not only from the body of the candle, but also from the wick of today's candle. And we're approaching that VWAP here, that anchored VWAP that I had right here. So gold might be powering up a little bit. Let's just take a look at the intraday chart to see what kind of levels we have here as well. That 1-day max by Menthor Q framed the top of the conversation perfectly. That's at 20, almost perfectly. That's at 32.69 spot 3, which also corresponds to the top of the London initial balance. That's the purple line up there. That's the target on the upside still. If we pop up there, then we'll see if we could break on through further. Further up, really, you have R1 at the top here. R1 is at 32.87.8, and then previous session's highs would be something at 32.95. But right now we're getting a little bit of a move up. Point of control, we just blew through that point of control for the session, although we have a lot of volume clustered down below this call resistance level at 32.50. On the downside, we have Jacks 4 down here at 32. 35. We spent a lot of time there already today and really, really early this morning. And then previous session's low is way down here for the mega bears today, 32.10. So that's what gold's looking like. We'll just pop over to the E-mini S&P. Shoot this guy up. Let's start with the daily really quickly here. We're just surging. I have my farm line up here at 59.30. That's that. We're kind of in the zone where Pharm wanted to see us kind of break on through to it. We didn't break on out of it yet, but we're getting close. I mean, we're super, super close. We're about 15 handles away from that 59.30 level. And I liked his logic on that as well. So we kind of bounced off this area resistance, turning into support. The moving averages are just cranking on up. You're going to get the 21 pretty soon crossing over the 50 if this continues. VWAP is in the rearview mirror, and stochastics remain highly elevated. Just to kind of shoot for some targets here, let's take a look at an intraday chart really quickly here. We have a lot of stuff happening at the top of this chart. We have a blind spot. We have 1-day max. We have that R1, all kind of tightly clustered around that 59.20 level. We just wicked through it, this particular candle. Call resistance at 59 even. Again, we're marching. This is a nice orderly rally on a 30-minute candle. I know intraday it'll look, a 5-minute candle might look a little different, but look at the VWAP. The VWAP is just arcing straight up. We have price separation between that session VWAP and price right now. I would say considerable. If we do break through, well, I got R2 on my radar screen. R2 is at 59.30. I'm sorry, 59.70. Remember, Pax is I keep calling Pharm Pax and Pax Pharm. Pharm's number again is 59.30. He'd like to see it close above that, and so would I. But R2 is also in play on the upside. If you're bull, and if you're a bear, there's all sorts of targets on the downside. Previous sessions high kind of intersects with Jack's 3, kind of intersects with the bottom of the value area. This kind of zone right here is kind of important around 58.75, but would mean we'd have to be trading below that session VWAP. And right now, yeah, it's going sideways a little bit, but actually that would be a nice kind of retracement level too, back down. And my guess is Stowe might add to his position if the equivalent happens in the NASI. So that is today's Edge report. We have 2:30. We're going to come back with me and Shai. We're going to be talking about hot commodities. We have wheat. If you haven't seen wheat, that WASNI report kind of shook things up. We've got silver on the move. Wait till you see the live cattle chart. Live cattle. There's been some activity with respect to Mexico, so that's going to be an interesting chart to talk about. And Shai will walk us through why it's happening. And then platinum also, and talk about platinum because that's also on the move up about 1.63%. Then we're going to have Stowe back for more. Maybe he'll add into that position, and he'll be joined by XYZ from Southern California. Having said all that, folks, appreciate everybody being here with us today. You guys are awesome in the chat. Appreciate you smashing that like button. Appreciate everybody helping each other out. This is what this is about. In the NinjaTrader Live side, we try to get folks here that are helpful, and I think we've done a good job at it. But more importantly, you guys are helpful in the chat. Again, high tides lift all boats. Thank you very much. Appreciate you being here. We will be back. See you at 2:30 East Coast time. Thank you.